HSBC's Mackay says there will be no let-up on cost savings. UK, so he says HSBC says it's not considering a spin-off of UK Retail Bank.
There are reports.
So HSBC's Mackay acknowledges slightly lower revenue in the fourth quarter. You got Ukraine equities are up nearly 10% here as they jump back. Bond markets also soaring higher after the weekend events, and peripheral debt being helped out by Spain's Moody's upgrade. Yields on the Spanish 10-year at 3.54%. Italian 10-year yields at 3.608. Yeah, Daimler Trucks here see 2014 Europe truck market slightly below 2013. This comes shortly after VW set to buy out Scania, truck maker. You've got Daimler seeing moderate growth in global truck demand, but sticks to its forecast of sales rising significantly. HSBC's Gulliver says no HQ move planned based on bonus cap. You got HSBC's Gulliver says there's not enough regulatory clarity to decide on a buyback. Says the bank needs to know more on Tier 1 requirements.
So, this is the start of our new schedule. We've then done some changes in the studio here. We've done some changes in the lighting. Hopefully the green screen looks better. Everything looks better. So we're going to be starting now with a more stable and predictable show. I think you can hear me fine. As far as I can tell, going out. And let me just... So we're going to keep on the squawk now. So we're going to start doing more of a pre-show here. So it's going to be myself and Ed, and we're going to get Michelle on today. And let me just, so I'm keeping on so far the squawk here. Just pull up Skype. And we have our second Skype machine starting just now. Oops. As you can hear. So now we have 2 people we can bring in. Actually, we're going to bring in much more than 2 people, so it's going to be much more dynamic. So our first show of the week with our new computer setup, we'll have 2 guests. So we want to have more of a conversation than it's been, and bring it more dynamic. So what you'll see here, instead of us preparing offline, we're going to prepare more sort of in tune with you guys, so you get to see.
Gold continues to edge up here, ahead of some Eurozone data up on the hour. We'll be looking at a final January read for inflation, expected to confirm the soft overtone really to the headline inflation rate on the month. 0.7. We'll have a look at that in just under 5 minutes. Jazbeck's comments then just getting wider area about no deflation risks for the area being seen. Says we should still take deflation scenario seriously, however, speaking in Handelsblatt.
Also closed my jacket. I know that's illegal, but I think on screen it's legal. I'm not sure. Looks better. Pop my cuffs. Boom. Okay, so in the next 30 or so minutes, this is the so this is the pre-show where we show how we do everything behind the scenes, kind of, and where we also show a little bit of how we're going to think. We're going to talk a little bit, maybe more in depth in a way, compared to the previous one where we did a longer show, but more, that was more, maybe not everyone has an hour and a half to watch it. So, and we're going to do more sort of segmented things. So I mean, we're putting a load that's too great on Ed, to be frank, and it's a lot of work for him. So we were trying to figure out something that makes more sense, like logically makes more sense, and hopefully you guys will appreciate it. So we're going to be talking today. Just bring it up here. We're going to be talking about how to become a trader, and I think that's it's a pretty great subject. Um, let's see here.
Bank of America Merrill Lynch
So
cuts
we're going to be
Vodafone
starting
to neutral from
London
buy.
time
Target now
around.
188 euros from 215 euros.
We're going to be starting around 9:30. So we're going to try a few things now and see if you like it. Please give us feedback on Twitter or else on other places where you can email my handle at myhandle.com or something like that, where I'm going to be tuning out of the Livesquawk now. We're going to get Harry on himself. And let's see here. What is your inheritance? I think it looks a little better now. Everything tighter. So add this here any second. How to become a trader. Okay, and Michelle is ready as well. She's going to be our first guest, even though she's an owner. So I guess guest is a little bit of a degrading title. Yeah, owner. So when you turn in and you have the live stream on, this is kind of what you get to see, us setting it up. That's the ID anyway. But when you see the recording, it's just a tight presentation. So depending on what you want from this, we're going to put out at least 4 different versions of it. We're going to put out 4 different versions of it. So it's going to be, or 5 actually, because it's the live stream. It's the recording of the live stream, just raw. It's going to be a recording of a tight recording of the show, which is never going to be more than an hour, hopefully around 45. but the Raw is going to have a pre-show and a post-show where we just a little less structure and kind of like a warm-up and a warm-down, I guess. And we're also going to have an audio version. We still have an audio version, but we haven't ramped that up fully yet, just because it takes time. Guess I'm in the wrong account. Yeah. So I mean, we don't have any significant subscribers on the podcast yet, because frankly we're not putting out enough yet. So this week we're gonna fix also the backlog of all episodes. Right now we're not happy with anything the way it looks now, so it's gonna be a little easier. It's quite frankly very hard to find old recordings, so just bear with us a little bit, and it's gonna get better. So by Wednesday we're gonna have a not time off. We're gonna have a little bit of a relaxed time on Wednesday, and on Thursday, Tuesday, and then on Wednesday we're gonna be back. That is a great chart. It's so confusing to use YouTube these days. I don't know if I'm the only one, or I got 5 Google accounts, and one of my Google accounts got multiple YouTube accounts. It's a little broken, if you ask me. We're going to be talking a little bit about Donald Rumsfeld, and yeah. So we're gonna have Harry on. I'm not sure if it makes economic sense to have a news show broken out of this. News gets stale so quickly. So we've decided to take, or I decided to take Harry on as part of Phil or Kill, the pre-show, which makes more sense. So if you want to see it, it's really only live that it has any significance to you. So just stay on for a few minutes, and then. So we're not delayed now, luckily, since we set a loose time limit. we can be delayed because setups takes time, and calling people takes time. Setting up what I prefer to call assets, which is all these different pictures and stuff like that, takes time. What I really don't like about YouTube is the fact that I can't push HD. So if you're watching now and you're not in HD, you should change the setting just down below to HD. But quite frankly, I understand from a business point of view why Google don't want HD, because it takes a lot of time. But still, it's no way for me to push you into HD without you specifically asking for it, as far as I can tell. I'm going to show off a little bit of one of our sponsors here. It's my my terminal of choice. It's just this is what I use to monitor markets. As I don't trade, that's how I use it. It's a trading and monitoring platform. It's called Infront. You can find it at goinfront.com. It's GOINFRONT.com. and it's a Nordic-based platform that has that takes on Bloomberg and Reuters at a very real sense. So at 1/4 of the price, you get almost exactly the same, and they're launching new stuff almost at least monthly, but even sometimes weekly. So they have a couple of new really cool stuff. So this is what I'm using here is the Pro Plus, which is their $350 a month terminal. And if you press the little Go screen here on top, that's one of their new add-ons. You have the entire platform in a single screen. So something I've been using lately is more, because I'm watching more news. I have to watch the G7 macro stuff. So here you have an overview of all that's coming, that's been expected, previews. I like the global IPO overview. It's something that we watch more than we would in the past because IPOs are hot these days. And yeah, oh, there's infront blog. It might be a blog post of me, from me, the other day. And but anyway, so you have all these different breakdowns. So you have nice overview screens like commodities here, which is something I keep on my default screen. And benchmark bonds I also keep in a smaller version. But it's also something that's really good. It's very adaptable. As you can see, it's you can squeeze this quite tight before that screen squeezes in too far. Ed's telling me here 5 minutes is going to be on. This is just a very adaptable platform for very low cost, where you have exactly the information you need. A lot of Norwegian people will watch the Norwegian calendar, which is of course only quarterly numbers, but you have a nice overview of any kind of data you really want. So sectors, this is the breakdown of Swedish stocks. You can export everything into Excel. I like to look at the biggest. No, I heard about this. I just briefly heard it. Oh, Scania is getting taken over. Oh Lord, what's the Swedish index doing? So this is how I watch Stockholm. Stockholm is not up more. So I guess it's not part of that index. Oh yeah, it is. See, it's a fairly small stock, but it's pulling up the index by 7.8%. Wow. But there's some heavyweights that's pulling it down. So H&M and Swedbank and a few other. But see, this is the way it works. It's so easy. So as far as these index movers, I have nothing that makes that is this simple to use. Today historical, but where I really enjoy to look at this is the old school view here. So I especially like this one, which is exportable data. You can add multiple columns here. You can have a bunch of different things where you can sort from, and you can export this very simply. Control C, Control V into Excel, and you can also do. You can take a single field here, like if it's something that changes, like the last price or something. You can just Control C it, and then you can get it in Excel where it's live updated. It's a nice thing. And I also like to keep this that I helped created. It's called a newswire. Here on the right, it's basically a collection of relevant Twitter users that tweet only news stuff or various things specific to different topics. So anyway, I really want you guys to check out the terminal here. As we waited for Ed and Michelle to come on, it's nice to show off the people who make this possible for us. So we should be ready in a few seconds. We're going to start doing more ads, by the way. Let's see if this is possible. Download. this is possible, it's much easier. Beautiful. Great, that's so much better. I love it. Can I unpack it directly into the... Yes, I can. It just increased... just became a little bit more efficient here, which is always nice. They're old files into old. Go. So to oh yeah, if anyone wants to come and visit the studio, you're more than welcome. If you're based in Oslo, just let me know. We have people here all the time, so it's always fun to have people to tell us what they think. We'll call Harry in. While we wait for Ed, let's talk a little bit about the news. Yeah, you don't have to listen to the ringer, I guess. I'm looking at the audio gauge here. I see there was some hiss here. Sorry about that. Everything will get a lot better very quickly. So, let me just arrange this in order. So, banjo playing guy. I like him. I need this one. I don't know. Uh-huh. After him, is that guy? There's 2 stages here. And after, so it would be after him. Yes. So we're having a little bit of a trouble reaching.
Hello.
Hey, Ari.
Hey mate, how you doing?
Hey, we're good. So we're doing some changes on the setup here. So we're doing more of a pre-show kind of a thing. So Fill or Kill is kind of a hour and a half, 2 hour ordeal, and we're
Okay.
sort of baking the news into it. But like all new things, we're a little bit delayed.
That's all right.
So we wanted to have you come in like as a part of the pre-show, if that's okay.
Yeah, sure.
And that what on earth is going on in Sweden? I just heard you squawk it, and then I looked at the is it a buyout?
What in Scania?
Yeah.
Yes, VW come in for Scania.
Wow.
So yeah, that's why their share price is just roofing at the moment.
But I noticed the index is not up very much.
No, I mean it's not one of the indexes we look at too meaningfully because you know, it just to trade it is, I don't think our guys trade it. But yeah, I don't think it has. I don't know if it's a big shock either. I don't think it's a massive shock to the market, but I mean it's obviously good news for Scania's share price.
Yeah.
On the back of that. But I mean there have been tie-ups between the two anyway, I think. So
Yeah. Anything else that's standing out?
HSBC numbers today as well. Disappointed. That's really hurt the banking sector as a whole.
Yeah.
So the banking sector is not doing too well at the moment on the back of that. Nothing, you know. I think ultimately their earnings weren't terrible, but they missed against estimates. So they've been hit on the back of that.
Anything macro stuff that's interesting?
Well, yeah, G20 over the weekend, and obviously loads of commentary about that. We've had about 3 or 4, 5 even ECB speakers, ECB commentators, led by Draghi over the weekend, all saying deflation is not the main scenario, but I think they're just gearing the market up for some sort of to expect some sort of action. If not action, I think just words about or heads up about potential action to come. I think they're just gearing the market and making sure they're ready for it.
Yeah.
So that looks imminent. To me, it does look imminent. The way they talk, the language, just having observed them for a while, just the language, it makes me think that they're about to jump on something.
Yeah.
Really. So those are the things that, yeah, G20 really talks about growth, acknowledging the fact that they have to make provision for growth moving forward, and that seems to be the main message coming out of the summit over the weekend.
Yeah, it just seems very quiet. Is it just me, or?
No, I think as people wait to see how things pan out, and really from the West European point of view, it's about the next ECB meeting and you know, gathering information into that. For Eastern Europe, obviously the situation in Ukraine is still fluid, although it seems to be getting there seems to be some sort of resolution. I hate to say it's resolved yet because it's not, but you're seeing some sort of resolution there, which is helping. And the stateside, there's no Fed meeting this month. You have to wait till March to try and see what Yellen does when she takes the chair, really, to see where they're going. But they seem to be on a similar path. There doesn't seem to be any kind of shock or horror from them.
Yeah.
So it's really about ECB and what they do. So you have to keep an eye out for that.
Yeah, just like that George Magnus post from last week, where he says like get over central banks.
Yeah.
Like the world has
we can
moved
try,
on.
but I don't think it's that easy.
So yeah, I don't know. But it's that. What are traders? Anything in particular traders are looking at today? I see more chatter on dollar Canada and.
Yeah, dollar CAD. There was some data out on Friday. I think it was generally there were two bits: retail sales and CPI that gave sort of differing sentiment, I guess, to the loonie. But where are we today on that? 111. Yeah, it's weakened again now. It seems to be the way it's facing. That's the momentum. Is with a further weakening of the Canadian dollar.
Yeah.
So I think that will continue for the time. I don't see that stopping in the near term. It's a tight range this morning, so there's not too much you can take from that, relatively speaking. But I do think people are looking up for a 112, 112.50 as the next major sort of level again to sort of try and to see if we can sustain levels above that in the short term.
Okay. That's brilliant, and I want to thank you so much for sitting down with us a little bit. Thank you so much for having the squawk with us. Okay,
No
so people can sign up for following the markets live on livesquawk.com.
Excellent.
Okay, thank you so much.
Thank you, Sverry.
Yeah.
Sorry, hi.
We're just easing into the new sort of the new pre-show and new schedule. Is this too early for you, or do you think it's fine?
That's fine. It's we need to get nearer to where we want to end up, and we're still, as we know, a long way away from the structure and the shape of everything.
Yeah.
And the workflow was much better for this. But unfortunately, my intern wasn't aware of the new workflows, so
That's fine.
So
No,
we're
but I
just
mean,
a
this
little bit.
is you got to break some eggs in the process like this. I mean, it's of course we're doing so many different things. So, but I hope you're okay with.
Fine. Yeah, and well, what I wanted to do today was again, it's interesting because this is a learning experience, certainly conceptually from the trading perspective, as you go along, and bringing in things we've discussed, and then kind of reinforcing some things or developing them to reach to to take it one stage further. And talking of stages, one thing I wanted to do today, excuse me, was to talk about steps and stages to being a trader. And it's not just, and it struck me as kind of almost ironic that the market moves in steps, and it seems that everything I do or have done, or everything I read about, Jesse Livermore's and people like that, it's all about taking steps towards, what goals you want to achieve. And the same with the markets. The markets move in steps towards a certain, not conclusion because they never conclude. And that's kind of what I wanted to do. So that's the shape of how I wanted to take today's shows, was about how to be a successful trader, you do need to move in steps.
Yeah.
But also to recognize, to be a successful trader, you need to recognize that markets move in steps as well.
I think it's such a good topic. To be a successful trader is great. It's a perfect topic for this.
And and it's not just about trading, because if you want to become, you want to go beyond trading to the next level, you want to be a hedge fund manager, then you need to take maybe slightly different steps as well. And that's why it'd be great to have Michelle on.
We have her lined up
as we go along. And then obviously in future will be the intention of the future structure of the show, which I'm sure people are somewhat bemused or confused or excited or whatever about, because it will be quite different, will be to have more people on, different people on with different perspectives and doing different things as well.
Yeah.
So it's kind of like we need to ease our way towards that before we can jump straight into the deep end.
Exactly. So let me just start a regular recording and do an intro, and I have a little surprise for you.
You always have surprises for me.
This is a good one. You saw it yesterday, probably. That I sent you. I made a little intro for us.
Oh, cool.
So we can have a nice starting point. I'm gonna make an intro specifically for Fill or Kill, and this was an intro for the whole BIGtv, but I'm gonna do a specific one, and I'm gonna do a very, very extreme one. So just
a very what one?
So I'm working on one. I'm not sure how much I'm gonna work on the kill aspect of the Fill or Kill, but it's
So
quite extreme.
We'll probably die anyway. So
yeah, for sure. No, let me. So this is. I'm doing it in a sort of roundabout way. I just completely forgot that I made this intro. So let me start it here. Okay, we're still selecting our audio. So I'm just pressing record and we're good to go. We have a new intro. It says something like "real people, real talk, raw information." And,
it's real. I thought it was real.
something like that. So I spent all last night making that, and that means it's the first time we're sort of a grown-up channel, and we have all the birthing pains to show for it. And we're sitting down with Ed Mats like we do every day, and we're talking Fill or Kill, and I'm making a Fill or Kill intro as well, and it's going to be a lot of killing, and I don't know how to do filling really, so that's exciting. And you have a great topic today. So far we've had really good topics, but I think today is the best topic for it. Basically, how to become a successful trader. Am I right?
Yeah, essentially, it's kind of a natural conclusion. Some of the things we've been talking about, how you implement that, and it kind of brings the two things together that I've noticed in my past, and I've noticed because people will realize I'm kind of interested in reading and finding out about other successful traders, that they tend to move in steps and stages, and that it's funny because the markets also, I'm very strongly of the opinion the markets move in steps and stages. They don't, although they give the impression of moving everything at once, they actually do it step by step by step. And the same thing with trading. To be a successful trader, you can luck it. You can, your first trade, be a big trade and you can make loads on it and thank you very much. And it's a platform and you carry on doing really well. Unlikely. Or you can do it step by step by step and recognizing that over time, trading is a slow process, methodical process. Over time, you make 2 steps forward, 1 step back, and as you in a year or 2 years, 3 years down the line, you look back and you compare yourself to where you were, and then you realize you've gone a long way. And one thing that strikes me, Sverre, is since I started trading a long time ago, that people are so lucky nowadays to have the information to help them to learn to trade. Whereas, it was very much, back when I started, very much relying on mentors and other people and what they did. And there were very few books about it. You've got the Jesse Livermores are out there, etc. But there's so much more information now. And that's part of the problem, because more information, more opinions, more ideas as to what you should do, it creates more steps. So the important thing is to recognize which steps to take in which direction.
Can I ask you something in danger of throwing you off?
Yeah, go on.
Do you remember your first trade?
Yeah. I actually talked about one of my first trades, and it wasn't my first trade. I described it as my first trade because it's my first proper trade. My first proper trade, I made 750 pips in dollar mark and took it back break even.
Yeah.
That's the one I talked about the other day, which was
you remember.
What? How the? It was just like I got so many people giving me lessons. I didn't need any lessons. I just saw 700. What was that? That was 4% plus just come back in my face. But so that was a lesson in itself. My first trade. Well, apart from I did a few other little things, shares and stuff like that. My first proper trade in a dealing room was I sold cable. And I sold cable a day before I went on holiday. And I was going on holiday for 2 weeks and I had to stop. And I came back and cable was 8 cents lower. Yeah, thank you very much. Cool. But I'd been stopped out. I stopped out the day after I went on holiday and I stopped out at the top.
But do you think it's okay to have, because you mentioned that a number of times, like having trades on when you leave. Are you comfortable doing that? Like even trusting a stop?
Yes. You got to trust the people you leave it with, but as long as you do trust the people you leave it with. In that instance, it was in a bank and they were looking after my stop, and I guess if they didn't do it, it's down to the bank, yeah? So it's all kind of internalized in that instance. Now, obviously, I'm by myself, kind of effectively, then it's different, yeah. But you still have, it's a question of trust. You have to trust the people you leave orders with, and if you don't, then that's a flag in itself. But it's all about, there's a lot of learning processes, a lot of steps to learning. And I can't, because for me, it's been over quite a long period of time. It's actually quite difficult to mark it out into different phases or steps, because there have been thousands of steps.
Yeah. And
I would be absolutely gobsmacked now if I explained to myself back, 20 years ago when I started, what I know now and what I do would just it would freak me out. I wouldn't recognize the person that I am either. I wouldn't recognize someone who's so rigorous, so methodical, so disciplined in what I do.
Oh, really? That's interesting. So you weren't always like this, because you strike me as quite a person with quite a strict routine and a strict approach and a strict, you approach it very methodically. Very little emotion in your trades. But you weren't always like that?
No, of course not. That's something you learn as you go along, I think. Well, not necessarily learn. It's learned for you. You're beaten up to learn it. Yeah. I mean, that's kind of like you teaching a dog to, do tricks. It's sometimes you get whacked about or whatever. Not that I would ever hit a dog. I should be careful of that analogy, but... But you know what I mean. I'm a dog lover, so I don't quite know why I went there. I just
It's very
I
dark.
tell you,
It's very dark
I
place.
can tell you why, but it doesn't matter. It was a film I was watching with my kids.
Oh no.
But anyway, let's get more on point.
Yeah.
So basically, what I wanted to do was take a twofold approach to becoming a successful trader. One is to recognize how to be successful now. It's kind of back to front, but I want to do it this way, about the markets moving in step. And then I want to talk about how traders should move in steps,
Okay.
or they do move in steps. So I wanted to start with something, just throw something out there, which, well, not throw it out because I've thrown it out there before. Have you got an Aussie gold chart there, the one I've shown previously?
I sure do. I thought we were starting.
Because I
with
kind of
videos.
wanted to use this as to take it from the concept of fundamentals and correlations. You know, I've said quite clearly gold is correlated to the Aussie, but there is a difference. There's a I can't speak this morning. Where are my teeth? 590-hour difference between the two. Aussie is being led by gold, and it's working tick for tick. And you've got to ask yourself, well, why is that? You know, you don't need to know why necessarily. You just trade it that way. But then, if you know that it's moving in steps, then if you just need to look at what's ahead of you, then you can trade it well. There's another currency, another market that is doing something very similar. It's following the same pattern. And so on the weekend, I produced a video on marketvisiontv.com, boom, boom, plug, on dollar Canada. Dollar Canada is an amazing currency. And it just excites me. I mean, obviously it's excited me more recently because it's been a rampant trend. But there's, do you have that really long-term chart there on dollar Canada?
I really like this. Michelle found this chart, was it?
No, I gave it to Michelle. I showed it to
cool.
Michelle.
Yeah, it's very interesting.
Well, it's what is it? It's 156-year chart on Canada. And you can see that pretty stable, fluctuating effectively, I think, around parity, saying there's a long-term equilibrium point of parity. And kind of obvious, isn't it? It has a stable relationship with the US. You can see that the sterling is slightly different. And that's in a video I discussed about the reasons for the fluctuations and one of the reasons why we're getting a fluctuation now. And it's something I alluded to before. It's the same thing. It's lagging the Aussie behind gold, and that it's actually got a correlation to gold. And just as an aside, someone can help me out here, because I was just thinking this through. If let's say we go back to the Aussie, if you say that, well, the Aussie is clearly following gold, then they're correlated. They're very highly correlated, 95%, probably something of that dimension, or something so strong that you can't ignore it. But if you were to put them at the same time, they wouldn't be correlated, and therefore the stats would be saying something like they be like a 60 or 70% correlation, and so that's not really enough to trade on. So the question is how some of these figures we get on correlations, the stuff I get through Reuters on correlations, are matching time and suggesting something's not correlated. Whereas in fact, if you look at the timing difference, they could be highly correlated. And it's my belief that markets are far more correlated than they appear to be because of the time difference. And very few people have seen the link between Canada and gold. Traditionally people say Canada, and this is discussed in the video I did on the weekend, Canada is related to obviously dollar index, the S&P traditionally, although that broke 2 years ago, silver, strangely, and more recently gold. But the time lag is quite significant, and it's moving in steps. So what it's saying is that gold, then Aussie, then Canada is markets moving step by step. And there's one reason why I think this is happening, and it all relates to a theory I've articulated before. Is, do you want to put up the chickens? There ain't nobody here, but that's chickens.
I was wondering where we're going with this.
What, you mean, you're wondering where the chickens?
Yeah.
It's the flood of quantitative easing dollars out there that is looking for a home, that fueled the big bull market in gold, and gold did its stuff, and the bubble burst, and now those dollars, went elsewhere. Went elsewhere, in my opinion, into the Nikkei, into selling yen, and they're looking for a home. And what we're seeing is we're seeing those headless chickens, the quantitative easing dollars, finding new homes step by step by step. You could argue Bitcoin was one of them. I don't know, maybe, probably. But those dollars got to find home. Have you got a brick out there? Do you know, I've showed that previously about correlations.
Yeah.
The chart of how the emerging countries' currencies are moving step by step by step. Don't think I put it there. My apologies, I've thrown you wobbly there.
I have it somewhere, but it's deep down in the archive. Let me find it.
Well, put up the other one about bubbles then. Can you put up the one about bubbles? Yeah. And that's the theory, is that the quantitative easing dollars are creating bubble after bubble after bubble. And
speaking of this chart here, have you seen the one on Bitcoin? I don't have it handy right now, but the one on Bitcoin is especially on Mt. Gox is so amazing because it actually it overlays the chart on the top left almost perfectly, almost tick by tick. It's incredible.
Well, I tweeted that. Yeah, you know that.
Yeah.
Tulip. I called it capitulation because I compared tulip, which is the standard bubble, tulips, the 17th century tulip bubble, with Bitcoin, and it's the same process. And obviously the Nikkei well predated quantitative easing, but same bubble structure.
This is the chart I meant. Is that the one? It's incredible because this is Mt. Gox here. It's almost perfectly overlaying it.
Yeah.
Isn't that amazing?
Yeah.
Of course,
as I said,
there are some practical
tweeted that in December, but it doesn't matter.
Yeah. No, I know that, but it's fallen down to the bottom again.
So I don't know what to say. Of course, yes, I agree entirely with it because I had the same idea, but it doesn't matter. And gold, oil as well. It has followed the same pattern and now is a punctured market in that sense. The volatility's died, and you can see there are other markets of gold followed that and is in a similar position, and South African rand, and you can see what it's saying about that. Possibly the Dow. Hello, 1928 Dow, same type of thing. The headless chickens with all those quantitative easing dollars are looking for a home. So it's not surprising the market's moving step by step by step, and it becomes quite difficult, because you would have thought, well, this is all so obvious. It's such a nice theory. I could throw Bitcoin into that. It's all such a nice theory, but why isn't everyone see this theory? Why isn't it so obvious? Because there's a lot of noise out there. You see one market will be influenced by another, and you're sort of often we're too close to it. This is the biggest problem. We're often way too close to see some of these trends and these observations, but they exist. And that's the question of trying to identify and strip them out. And if there's a couple, if you want to put up the thing I referred to before by Martin Evans, isn't it Martin Evans? About how it takes time for the fundamental news to get absorbed into the market. But if you think it takes time for the...
Do you mean, Martin D.D. Evans, yeah. Sorry.
Yeah. If it takes time for people to react to fundamental news or the fundamental news, then if it takes time to get to them in different stages, then they're going to react in different stages. It's no surprise that you see step by step by step. One market, the investment decisions, the criteria, the drivers behind it will be different to other markets. So it's not that surprising that similar correlated markets will do things, very similar things, but in a slightly different time. Now, from a trading perspective, that's brilliant. It really is brilliant, because although we believe we live in a global market and the market moves together with the same influences, it means that, like we did a couple months ago, sterling yen was a week ahead of euro yen. And just look at euro yen chart, thank you very much. And we had some strange things with the DAX. And obviously Aussie gold is doing the same thing. It's a gift. I mean, there's no such thing as a free gift, but it really does make our lives easier. The fact that markets don't all move at once, it means that if we miss one market, we don't necessarily need to go chasing it, because the same conceptual, even the trade setup could work for a similar market doing something similar at another point. And so that's why it's quite important. And here's the one I tweeted on the weekend, a Paul Tudor Jones quote about how he believes that prices move first, fundamentals move second.
Yeah,
And so it's making the same point that my view is that the fundamentals are moving, we just can't see them, and that the reason why prices do appear to move first, and then we find out about the fundamental reason, as we talked about previously, often find about it too late, and that the price is the indication of what's really happening, and they're moving in sync, but step by step by step, which gives us a great opportunity in identifying similar trades, but at different points. And if we miss one, we don't need to chase it because there'll be a similar market coming around the corner. And on that note, I know people have been asking me about the DAX, the fractal, the Mandelbrot fractal, which is working a dream. Yeah, I mean, it's going tick by tick, and it's got down up to 96.90, which means then, since it's traded the way it has, it basically means it's identical in price as well as structure, and it's kind of very similar in time as well. Basically says for this week, we've got time to chew the cud and talk about some of these theories and concepts, because although it's bullish, it should go sideways for the rest of the week, and it's only on Friday that it should start to break higher out of that bubble. And if it goes to the same price, the same structure, the same time, then we're talking about 98.90 as a blowout to next week, and get everyone bullish and long, stopping out on the shorts and get them long for 10,000 and find that it doesn't quite get there, and it gets handed back to them. Same type of thing that we saw in the beginning of the year, and we've seen the NASDAQ do that already this year. So there's an example of a market doing step by step by step. Maybe one or two other markets will do something similar. And if I've got to throw this one out here, it's very apart from Howard's The Great Last Chance to Sell, I think I'm going to have to keep mentioning Ed Sakota to you and his banjo playing.
Way ahead of you. Do you want the video again? I don't know where to find that.
No, it's fine. His Whipsaw song. For all that and all the, I always for some reason bring in Foxy Forex when things don't kind of go together, and great banjo players. I don't know if that's a banjo or not, but a musician like Ed Sakota being a brilliant fund manager, brilliant trader, very successful. And he's featured quite strongly in Market Wizards books and other similar things as well about some of his approaches. He has 5 steps to trading. He calls them his trading rules, and cutting losses, running winners, keeping
keep bet smalls, keep
bet smalls, follow rules without question, but know when to break the rules. They're all very, very solid steps, if you like, to you start to implement them one by one as a trader. It's often
especially the
difficult.
first two.
Sorry?
Isn't the first two in practice much harder to do than in real life? I mean, some traders, I don't remember his name, from the Market Wizard books, have incredibly tight stop losses. But
I talked about there's a picture of Paul Tudor Jones in front of his house saying that he has very strong views, but a very small tolerance for pain in the short term. In other words, he doesn't. I do the same. Yeah, I have. I try to move my stops break even as soon as I possibly can.
Yeah.
So I'm not risking anything, and it goes back to my very first trade, my holiday. I've done quite a few holiday trades that have done that. I get stopped out on something that's a great idea, but I didn't. But
you prefer to lose a great trade rather than enduring the pain of maybe the first couple of tick downs, and because psychologically it's a very different place to be.
It's entirely on the circumstances. Ordinarily, my general approach is let it go. You missed it. So what? There's one around the corner, and there always is.
Yeah.
And people have, I would say one of the things about trading is one of the blocks to trading is the here and now. It must be what's happening in the next 6, 8 hours. I need to make money today, no, right now. You know, if the opportunity's there, it's not there. Don't chase it. Don't force it. You know, they will come. The opportunities will definitely come. Probably this week, if not this week, next week, and then you know the month after that, and the month after that. They do to come, and you find that if they're not coming, then you start to develop things. You don't force it. You know, you develop things for the different type of market you may feel you're in. It's no longer a gold trending market; it's a ranging market, and you realize over a period of 3 months that you're forcing it too much. And there's not here and now trading gold. It hasn't been for a long time, and probably won't still be a here and now trading gold for quite a few months to come. But you change things. You don't ever force it. I mean, well, one thing we do, we learn, we improve over time. We improve because the great thing about trading is it's not like football, maybe as a midfielder or whatever, and people say you're good and you believe them, whereas in fact you're getting worse. There's quite a clear bottom line in trading that tells you you're not doing well and you are doing well over time, and it's your P&L, and that's the great thing. And it's recognizing that you may improve, you may be improving, but your profit and loss isn't improving yet, but it will down the line. There are several stages of competence, which takes us nicely onto kind of the theme I wanted to get to, because it's important to recognize that there are different stages and steps in becoming a trader, and ultimately if you want to be a fund manager in doing that as well. And there are a lot of steps. Have you got a video to hand on
the steps? Yeah.
On the steps, the stages
of learning,
of competence.
The 4 stages of learning.
Yeah. It's the same. It's the same thing. There are 4 stages of learning, but this what I've picked up on 5 stages for trading. But if you want to run the video, then it's.
Things I wanted to talk about today, because it keeps coming up, and as I was talking with you and you're moving into this new position, is this the learning stages. And we learn this a lot in leadership development type classes, and it's one of the things that I work with in my leadership program when I work with nonprofits, executive directors. It basically starts with the idea and the concept of unconscious incompetence. Basically, you don't know what you don't know. And it's a blissful, lovely place to be, because you know nothing and you don't care because you don't know anything. But then there's that moment when you go, oh my gosh, I know nothing. And that is the next stage of learning, which we call conscious incompetence. So you all of a sudden know what you don't know. I call it moving into your 30s, because that's kind of follows the same kind of thing, where all of a sudden you go, oh my gosh, I know nothing. And then through learning and training and knowledge and gathering and mentorship, you move into the 3rd phase of learning, which is conscious competence. And that's the best place to be, because you're still so excited about what you're doing, and you're learning so many new things, and the best teachers come from that, because they can take something and say, hey, I just learned this, here's how I applied it, and here's the information I'm giving to you. And the 4th stage of learning is unconscious competence. These are the people that just, they know it. It's in their bones, it's in their brain. The problem with that is the next stage after that is right back to unconscious incompetence. When you get to that point where you know everything, you're not learning anymore. And when you stop learning and things change, you don't see it. And so it's one of those, if you've ever seen The Illusion, where you keep walking up the staircase, it's the same kind of thing.
Sorry.
I think there's really good. I tweet it. In fact, I have tweeted it before. It's drawn. I found it through something called the Kirk Report, but it's basically written by an anonymous guy. I get the feeling it's someone who was at university as a trader, pretty smart person who's quite self-aware, and saw the links between what are known to be the 4 stages of learning and what they believed were 5 stages of becoming a successful trader. And you ask, well, where's the 5th stage? And the 5th stage is what he calls the eureka moment. when you start off, you don't know what you're doing. You may do, the unconscious incompetence, and you may be successful. Your first trade may be successful. Your first 10 may be successful. You may actually think that, that's the report. You may actually think that you have found the Holy Grail and that this is easy. And I'm sure we've all been in the position at some point, not necessarily early on, but we thought this is actually quite easy. I can do this, and I can make lots of money, and I don't have to work that hard to do it. And then you go, you suddenly start to lose money, and you realize that, in fact, you start to recognize how little you do know. And that's often when people they go out there and they start testing different systems, even the whole different approaches, not necessarily they might start being quantitative analysis rather than qualitative. And there are lots of services out there selling different systems, and it's that type of person, once they realize that they can't succeed themselves without some sort of help or method, they go into new systems, they go into chat rooms, and they think this is the way to go, and it's a really hard, long struggle. And in fact, that's when most people quit. The figure, I don't know what the figures are, but apocryphal figures, about 90% of people quit, burn their accounts within 3 months, and many don't come back because they get to that stage of actually, you were in a similar position, were you, when they realized that in fact maybe trading is not for them, it's not so easy, it's not so difficult, it's hard to apply some of these rules, and they're trying to apply other people's rules and they don't work, and then they give up. You've been there, or?
Yeah, that was my almost the exact time horizon that I always thought I wanted to be a trader. Due to work, I couldn't. So when I came in full force, and with all the lack of skills, like a lack of a skill set and lack of proper horizon, getting the first few like properly good trades in, and all of a sudden you're being burned and you don't know how to deal with it. And so my sort of end game was kind of like, I'm not so sure this is exactly what I want to do. It doesn't fit my personality as well as what I'm kind of more of a natural entrepreneur or something like that. That's kind of something where I feel like I can fully sort of develop from who I am. But if I would start again today, having done this, which is kind of like a masterclass for me, and having understood how many different approaches there are and how rigorous you have to be regardless of the approach, it would be a completely different experience.
Well, you've just described the fifth stage that's not included in the in that video we just saw, called by this anonymous person. And if you're out there, get in contact, because there's some really interesting stuff in here. Called the Eureka moment, when you realize that what you're doing is wrong and it's not working out. And most of the problems, the issues surround risk management. Yeah. And that you may have or may not have a good system, but most of it is because you yourself are not applying, sticking to rules. Your system doesn't necessarily work off the right risk return parameters or the right probabilities or whatever. And then you start to, if you're going to go through that, or let's say you were to come back into trading, then you learn about proper money management, risk return and leverage and the probabilities, etc. And then you start applying a system. And that's when you get into the conscious competence, knowing that you've got a system that's going to work sometimes, not all the time. You're going to lose money, but you're comfortable with that because you know your system is going to work.
But can I play you a video in regards to this that I showed you before, the Donald Rumsfeld video? I think it fits fairly well here in terms of understanding how markets move and your part in it.
Yeah, far away, yeah. Go on.
So this is a 30-second clip, which I personally find deeply impressive, and it was utterly ridiculed at the time. He's talking about how to deal with information flows from a government.
There are reports that there is no evidence of a direct link between Baghdad and some of these terrorist organizations.
There are known knowns. There are things we know. We also know there are known unknowns. That is to say, we know there are some things we do not know. But there are also unknown unknowns. The ones we don't know, we don't know.
Excuse me, but is this an unknown unknown?
I'm not.
Several unknowns, and I'm just wondering if this is an unknown.
I'm not going to say which it is.
Mr. Secretary,
I'm right here. I'm right here.
Hats off in two ways. One is he's clearly a clever guy. He's also very articulate to hold that in his head, and and not make any get it wrong as he delivered it. Yeah, but actually, well, he's a very contentious figure in history, isn't he, Donald Rumsfeld?
Politically, yes, very.
There's a great way. One of my favourite quotes of all time. He delivered. Someone asked him, and apologies to any people of this nation out there, but he was once asked what it'd be like to go to war without France, and he said going to war without France would be like going deer hunting without an accordion. And I just thought that was
That's brilliant.
which is one of the best put downs of all time in history. But anyway, that's beside the point. I mean, that alludes to a contentious person in a contentious time. So I don't really want to go there or dwell too much on that.
But in terms of the pure sort of intellectual weight of that speech, that 30-second speech, there is something. There is a lifetime of experience behind that little quote.
It's learning about awareness, isn't it? I mean, it's something, and it's very apposite. It's very appropriate because how I describe what I've done. I haven't been aware of learning over time, and you look back and you realise that you have done it. It's only in the last 5 years or so that I've actually been very aware of what I'm learning and how and why, and the rest has been incremental. And that's why I'm saying people these days are so fortunate. There are a lot of people out there, a lot of texts, videos, everything, courses that actually do help you learn and do it in a structured way to a point, to the fifth and final stage. Is, Donald Rumsfeld was talking about the unknown and the known unknowns, when in fact you get to the unknown knowns, which it kind of sounds self-contradictory, but it's a point where you start doing things without thinking about it. And a lot of the things I do, I've talked about this before, how I start a day, I don't actually think about how I do it. A lot of things are so unconscious now, I just do because experience has taught me to do that. And
Exactly.
Necessity. I think you learn so many things through necessity as a trader. That's how you become a successful trader, is because you learn through bitter experience and then you start implementing them, the conscious awareness of what you're doing, and then you start doing it because trading is actually quite monotonous. It's a process. Do it over and over again. It becomes so natural, so ingrained that you don't even think about it. And that's the ideal state, is where you come, I was going to say a money-making machine, but you become a trader in the sense of you do things, you trade, without having to think too much about what you do structurally. Risk management is all part and parcel of the stages of success, if you like. There's also I want to throw this out slightly as almost an aside, because there's so many, and I want to take this on to the next phase. There's the 6 phases of, is it 6 stages becoming a trader? Bovada. There's another list there as well. Have you got that there? The mystification stage, the hotbot stage, the cynical skepticism stage, the squiggle trader stage, the inwardly bound stage, and finally mastery.
Can I ask you a question?
Yeah.
Which of these stages involve buying newsletters and listening to like these things? Is that like, do you think that's a positive thing, or do you think that's a negative?
Well, I've got a vested interest. I have a service that helps people in terms of direction. It's also got a trading, analysis academy, probably a better way of describing it. So, what am I going to say to that?
No, I don't know. I'm not saying it as a charge statement.
No, you don't need to. But look, I mean, I've talked before about if you want to be a good trader, and you want to be a trader, you want to keep your account and keep your capital while you're learning, then you would really want to look for shortcuts. And then the question becomes, what shortcuts do you want to take, and how should you take them? And you can be advised, again, in the shortcuts, listening to programs like this, listening to brokers who provide free services, in getting some ideas of them as to how you and where you should do it. The problem is because it's free, they don't necessarily dedicate the full amount of resources that they could or you would want them to help you do that, to take to take your shortcut to the fullest extent.
But it's also, I think I told you that I got a question from, I think it's a viewer that asked me about technical analysis, like where do I find information about this? And my first question was, why is that? Why do you want that? Because he clearly was fairly a novice. And I think that most people, they enter this world through, let's say, an article. They read about some kid that made $1 million. That could be the first trigger. Wait, you can do that? Maybe I should do that. And then you discover a few things. You find people like, I don't know, Zero Hedge. That's like a famous Twitter account. And you find, so you move into this. And it's just interesting to know, like, it's almost like a rite of passage you move through in trading. And I think
you do, and it doesn't stop. There's actually, which brings me kind of nicely onto, in fact, you talked about technical analysis. And someone like Paul Tudor Jones, who I would describe as my mentor, though obviously I wasn't trading with him or anything like that. But someone who thinks very similar way. I flatter myself if I dared liken myself to him. But he has a very similar approach in many respects. And in fact, he said, you talk about technical analysis. There's a great quote. I will quote. It's not. I haven't got a plaque for it because I wasn't aware you were going to mention this guy talking about technical analysis or you talking about technical analysis. Yeah, people are drawn in by greed. They're drawn in by the possibility of making money quickly. The old pioneering spirit. They don't want to necessarily go and develop a business for a year, 2, 3, 4, 5 years, or whatever, and maybe not make it. When trading, you can make it tomorrow if you get lucky. It doesn't have that. Trading definitely has that appeal. And Paul Tudor Jones actually described something like some of the nuts and bolts you need to learn. And he's saying that these days there are many more deep intellectuals in the business, and trading is a business, believe me. And that, coupled with the explosion of information on the internet, creates an illusion that there's an explanation for everything. Yeah, I mean that's quite self-appealing or appealing in itself, that there are answers out there that can help me make my million tomorrow, and there's an explanation for everything. And the primary task is simply to find the explanation. So it's got to be out there. As a result, technical analysis is at the bottom of the study list for many of the younger generation, particularly since the skill often requires them to close their eyes and trust price action. The pain of gain is just too overwhelming to bear. I mean, I think it's just it's very articulate, very eloquent, but it speaks volumes about how you have to go step by step by step, and be aware that you kind of need with the benefit of information, you can actually structure your steps in advance before you reach them. Rather than someone like me has to stumbled over many steps accidentally. We're so fortunate now that there are services, and there are people charging you $3,000 to come and learn to trade, or $5,000 or $10,000, whatever. Yeah. And there are some really good services out there, and I wouldn't.
Do you think some of these 5,000 services are worth it? Can you measure it in P&L?
No, it's very. Yeah, no brainer, no doubt whatsoever. If I tell you, that you show me how you trade, and I'm saying, well, it's quite obvious, your risk return is wrong. On every single trade you are doing, your risk return is wrong. You go away. I mean, it depends on the size you're dealing, but I could have just saved you 20, 30, 40, 50, 100,000.
Yeah.
Yeah. There are people out there managing hedge funds who don't employ some of the basic soundest techniques in risk management. Yeah. Some do some very, very, very clever things, but there's some who don't, who could go to a service. They could pay $3,000, $5,000, go to a service and realize and reinvent themselves. The very fact, as you probably gathered, the very fact that one addresses what one does, sound like the Queen now, the very fact I ask myself, what am I doing? How am I doing it? Is a very, very important approach. It's self-awareness, and that's where the five stages come. You go through the awareness, the extent to which you're self-aware, to the extent that you start to do things, the right things, an unconscious vein. And that takes you on to an interesting stage. It's the stage I'm at when you don't question things because I do them without thinking. And that's the dangerous stage because, if you take it to a level of detail where you talk about markets or markets are changing or they're moving in steps, some markets may have moved on to the next phase and be like gold is no longer a trending market, but I'm trading it like a trend follower. I'm going to get buried as each time it comes back, I get stopped out. If I'm not aware of what I do, even though some things I do unconsciously, if I'm not aware, I just put them aside, then I kind of come unstuck. So I need to be flexible. I need to question. I don't need to, every time I do something, every time I look at a trade setup and say, Ed, it needs to be 2-to-1 at least, no worse than 2-to-1 reward to risk. I don't need to do that. But if I need to say to myself, just step back, why am I trading? Why am I running after this trending market that's not really trending?
Yeah.
Why am I stopping out, and I'm not, on the euro every time it goes to new highs? Why? And then you start learning, why am I actually eating the stops on the euro dollar? Anywhere it goes, stopping out. And as a short-term trader, it's going for the stops. The same with euro sterling. For the last 9 months, where the obvious levels to break, takes them out, stops them. Once you start realizing, being aware of some of the things, you start factoring that in. So what I do, let's say I'm fading when I sold 137.65 on the euro, as it broke to new highs, I was eating the stops. I then say to myself, I need a 2-to-1 risk return.
Yeah.
And so I need to get I apply my methodology, but I'm also aware that the market is changing. You sent me a message about Michelle coming on because it would.
Yeah, it would. I think it would fit quite well in this conversation here, because.
I do. Well, let me just. There's some people will be aware of market profile volumes. You heard of that, Peter Stoudemire?
Not immediately.
I don't profess to be an expert in market profiling, but it's about the volumes and where the volumes at certain levels in a market or in a trend or whatever, and it gives you good information. I think it's a brilliant approach. I think it forms part of the same category. Do you want to put up a quote from him?
Is it Dow theory, or are we jumping a little bit?
No, you got a quote. Trading is human.
Sorry, trading is being young.
Yeah, which I kind of think is ironic in a way. Let me talk a bit. Market profiling is, I think, very similar to fractal analysis, and I hadn't got into it enough. There's a good example of how you should always be learning and always be aware. It's tapping into and trying to understand a market and how prices really move and why, beyond what we know already. And I think to understand and recognize that the volumes and why people do buying and selling at certain prices, factoring that into your analysis it's all part of sentiment analysis in some ways, but it's very important, and I think it's very underexplored. And so what the work he's done in that area is really good. Do you not have?
Yeah, I have it here. It got corrupted and the transfer here. So 1 second. It's a little bit of last minute editing here. There we go.
Yeah, trading is being young, imperfectly human. I just love this quote. It's so real and human, and it's actually one reason I started doing this with Useferry is there's a lot of gloss out there. It's a very rich, fat industry. A lot of people want to join it, and it's very glossy, and the gloss sells and traps people and attracts people in the wrong places. Exactly. It's not real enough. And I think, well, one thing about BIGtv, I think, is got the opportunity to be very real. And I think what he's alluding to here is reality. Trading is being young, enthusiastic, imperfect. You're not going to get everything right, and human. That's definitely recognizing the mistakes. And it's not old, exacting, and scientific, which kind of goes against the grain, because it recognizes that you need a commitment to be organized and disciplined. You need to have to make a commitment to kind of change yourself from being a young and perfect human, if you like, to being scientific, being exacting, to be committed, to be what essentially you are as a trader, is an information processor. You know, once you realize that, trading becomes so much easier, so much easier. It's when you take it to heart. You know, I've as a trader, I've cried many times, not recently or in recent years, but you know, when you get hurt by losses, you then want to walk away. You don't want to do it. Well, someone like me who just loves trading, I'm not going to do that. So I need to find methods and approaches that are going to help me do that. And that's how you get to that position through those 5 stages of competence to being a professional trader who does things unconsciously, and partly because it actually protects you. It helps you, you know, protect yourself from the losses, inevitable losses, and the pains that you'll suffer. There's another Stoudemire quote. Can we move on to that?
Sure can.
Actually, don't. Before you do, let me just say, I'm sorry, there's a great Paul Tudor Jones quote as well, which kind of ties in with what I was just saying. It's the normal. If you get beaten up so many times, yeah, you can do one of several things. And as a trader, any successful, there's a great quote actually I quoted on the weekend about winners actually lose more than losers, but the reason they're still here is because they keep winning and they win in bigger amounts. And so you know, successful traders know how to lose money, but because of that, they become far more aware of risk. And as Paul Tudor Jones says, the normal progression for most traders he's seen is that as they get older, or in other words, more experienced, something happens. They get more conservative. Yeah? They want to take less risk. There's a picture of him with his, I believe it's his wife, and you know, things like that, natural things in life. When you're a youngster and you're out there and you've got no ties and you can risk things and it doesn't really matter, you can always start again. But when you've got a family, you know, I've got 5 kids, private education, etc., etc. That kids? Starts adding overhead. You can't afford, you know, you can't. I've got a massive overhead.
Yeah.
And I need to. Can't go for the big one and risk everything because I can't afford to lose. So again, the disclaimer: don't ever risk anything that you can't afford to lose. No. So that naturally is a natural. There's no verb to conservative. You actually makes you become more conservative, and you need to recognize that. And that, again, when you do things, you build things into a process that makes you do things unconsciously, a good risk management system, then I take risks that I'm probably not quite of that conservative mold, but arguably people would, when they've got a good, strong system, they can take greater risks than they would be naturally inclined to do it once they get older and more experienced, because a risk management system allows them to do that. Do you follow my point? A youngster, right. Anyone starting out enthusiastic, it's funny because what it's saying is not just being risking out there, not worried about how you risk things and go ahead and you know, punt away and then it doesn't matter, there's always tomorrow, I can always start again, can you? You know, there's that mentality, but then there's the flip side that you can't afford, and then you get too nervous to take a trade, you know, and you say, well, which is often the best trades. Yeah. The best trade, hardest trades often turn into the best trades. Doesn't mean that every hard trade will be a great trade, but often, you know, eating stops is quite hard because everyone else around you is stopping out, saying it's going the other way, and you're saying, I'm going to fade this. That's quite hard. But if your risk management system allows you to do that, your edge, your approach, then you've got to, you know, you can do that almost unconsciously. It doesn't matter.
But when you talk about risk like this, we're moving into the territory of hedge funds. Maybe we should bring on Michelle now. I know she's a little pressed for time, so do you think this is a good time to bring her on for?
Yeah, no, definitely do. And just as you bring Michelle on, put the other Stoudemire quote up because I think that's a nice. It's a nice tie-in with Michelle as well.
Yeah. So we're bringing in Michelle to the conversation now. I don't know if you can hear me. Here's the quote up. Michelle.
Yeah, I'm here. Hey. Can you hear me?
Yes, we can hear you fine.
Okay.
Yeah, I mean, Michelle has been. Hi, Michelle. How are you?
Hi, Ed. How are you? I'm fine.
I'm very good, thanks. I'm just finishing on what I was talking about Peter Stademeyer that good traders offer no excuses. They make no complaints because they've made all the excuses previously and they've complained enough previously. They're just willing to get on with it. The vagaries of trading, the vagaries of life. And I guess that's some of the qualities of...
I mean, what do you think, like, because I think a lot about sort of barriers to entry in terms of becoming a hedge fund manager. What do you think about the barriers to entry for becoming a good trader?
A good trader or trader, the barriers to entry, that's a really interesting, good question. The barriers of entry for a trader are too small, too low. Too many people can come in and not know what they're doing at all. I mean, you're talking, I remember when I started, because obviously I'm being a professional in the professional market, studying in banks, et cetera, and all my clients being investment banks and the like in hedge funds, and then going into retail market, someone said, Ed, you don't realize some of these people, the amounts some of these people are trading with are so small. You know, they're risking 50 quid on a trade or whatever. The fact they can do that, people can do that, to me suggests that there are no barriers to entry, really. There are very few barriers to entry for a trader. To become a good trader, then there are a huge number of. There's a great list. That in fact I tweeted, in fact may tweet later today, of 38 steps to becoming a trader, a good trader.
Wow,
You know, that's a huge number of steps, and I'm sure, you know, once you become a good trader, then you may look to, if you trade your own money, you may look to trade. Yeah, that's it. It's really actually very good. And worth reading. But I wanted to let's talk about becoming a hedge fund manager, because once you become a successful trader, remember that a lot of trading is aspiration. Once you've been successful, you are successful trading, and what is your next step as a trader? Do you want to manage other people's funds? And then do you want to set up a hedge fund? And everyone says, I want to set up a hedge fund. And it's not so easy, is it?
And I mean, the bad news is that the barriers to entry to starting a hedge fund have gone up in recent years. It's unlike the barriers to becoming a trader. And I mean, I don't really like to be the bearer of bad tidings and to be a negative person, but the reality is that about 80% of hedge funds fail in the first 2 years. And that's not because they have bad performance or because they're bad traders or even because they exercise bad risk management or blow up. It's simply because they just don't raise enough money or outside capital to be viable.
I mean, their overhead is so large.
How much do you need to start to run the fund?
Well, it depends a lot sort of on the strategy. I mean, if you're trying to sort of run a quant fund, that's very IT intensive, and the startup costs are going to be a bit higher. But I mean, the minimum really is 50 million, even 100 million dollars in AUM, and that'll maybe cover your sort of infrastructure costs, your setup for about 1 year.
Wow.
AUM being assets under management.
Yes, exactly. And that's just because, investors today, they expect hedge funds to have institutional type infrastructures. They want to see sort of separation of duties. You have high overheads, you have compliance costs, you have regulatory costs, legal costs. And so it's quite difficult, and the reality is that most startup hedge funds are going to fail, not because of performance, but because they're just unable to raise the minimum level of assets under management.
It's interesting because I think the stat for restaurants is the same, isn't it? 80% in the first year fail or whatever. But that's not.
No,
that's
I mean,
because they.
Yeah, and this is why. Again, your chances of success in terms of starting a hedge fund, they're going to go up so much more if you're coming out of an existing prop desk, hedge fund, or even from sort of a brand name bank. In fact, well, probably the optimal situation is to be like a superstar trader coming out of an existing hedge fund, and where the hedge fund then goes on to sort of seed the spin out or the startup.
Siege, the spin out.
Sorry?
Did you say the hedge funds sieges?
Where the hedge fund seeds. So
I see. Yeah, sorry,
this is the case of a successful trader. He's like working in a big hedge fund, and he has a discussion with the PMs, the partners of the fund where he is, and they agree to let him sort of set up a carve out or a spin out from the existing fund, basically just to take his trading sort of book and use it as the basis for a separate fund.
Yeah.
And then they will sort of go on to sort of seed the fund, usually with some startup capital. There the requirements might be lower, maybe in the order of 25 to 50 million. But more importantly, they support the startup with all of the back office infrastructure, the compliance, and the legal.
That's interesting because the legal costs now are huge because of all the regulatory changes and all the regulatory demands. But it's interesting, we've seen, especially in Scandinavia, we've seen a lot of ex-mutual fund guys go into hedge funds because they hear about the 2 and 20, that's 2% management fee and 20% performance fee. But then so far I've yet to see a single success out of that. Do you think you have to do you have to come out of a hedge fund to run a hedge fund? Because that seems kind of like...
Well, that taps in. If anyone, there are traders who be listening to the program and saying, well, okay, that's all very well, but I don't work for a hedge fund. I don't work for Goldman Sachs. I'm not a superstar trader in the bank. How do I,
well,
people
there
listening
are
there,
like
how do they become
platforms
hedge
like
fund
like Broomer in Sweden that will identify good traders, and if they pass all of the tests, we'll then sort of seed them with some money. But the trade-off is that Broomer owns the business. So usually there's some kind of agreement about sort of fee sharing, and some of the Broomer seeded funds have gone on to be very, very successful. So there are ways. I'm just saying sort of that the odds are stacked against you, and that's something that people need to clearly think about.
But success breeds success, is what you're saying.
Sure. And when you start a hedge fund, it's also like starting a business. And you're going to spend 20 to 30% of your time on business issues that have nothing to do with trading, hiring people, managing your IT, spending time with lawyers, doing your documentation. There's a lot of sort of work that goes on in the background.
Which actually sometimes is not a bad thing, because too many traders, in my experience, they're stuck at the desk too often and don't get out and don't do other things and don't appreciate some of the support work that's being done for them by other people. If they do it themselves, then often, in fact, they can help their own setup. So if you were, let's say you were a trader who's got a good track record, how would they go about turning themselves into a hedge fund? Should they go to one of these shops and say, look, I've got a track record, and they say, okay, that's cool. How about, you talking and developing a relationship with them in the hope of getting some money under management? Is that the best way to do it? Or?
They need to ask themselves some very sort of hard questions about how they're going to raise money.
Okay,
I mean,
what
raising
questions should
money
they
is
ask
key.
them?
It's and it should not be sort of underestimated how long this can take. And again, they have to also sort of look at their investment strategy and sort of what they're sort of proposing. Investors are looking sort of for three things in terms of the investment strategy. First of all, sort of, does the trader have a specific edge? Second, is the investment process repeatable? Something sort of that can work in a variety of market situations that can be replicated over and over again. And third, is it something that's easily understandable? And a lot of traders, they have a good sort of performance, a good track record. They've had good performance in the past, but they're not able to clearly sort of articulate sort of these 3 points. So that's also sort of something that needs to be thought about.
It's interesting you say that. I've known so many people fitted into the category you described, superstar traders, whatever, coming from their own hedge fund, breaking off, people, just good traders who got into a new environment, who find it very difficult to perform, not just because they've got to do all their other stuff, but they have to change the way they do things, the way they trade. And once you start doing that, your dynamic changes, your whole, the reasons why you've been successful change. And that's
absolutely.
Really
and I mean, there are a whole host of reasons why hedge funds fail that have nothing to do with performance. I mean, there's also, the issue of interpersonal issues. So you have 2, 3, 4, traders. They're maybe sort of good friends. Everything is nice and rosy, and they think, oh, hey, it would be a great idea to sort of set up a hedge fund together. But it's quite a different thing to be, friends with someone to actually sort of setting up a business with them. And quite a lot of hedge funds fail just because of interpersonal issues between the founders and disagreements.
That applies not just to hedge funds, but to any type of business. I mean,
Sure.
it's an old cliche that you shouldn't go into business with your friends because there's a risk, partly, that they won't stay your friends if things go bad, but also it's a different dynamic. Again, it's trying to duplicate what's successful and making sure it's sustainable, I guess, is what you're saying.
Sure, and I mean that's why one of the questions that institutional investors will ask when they're sort of evaluating a new hedge fund, they'll ask the principals or the partners just to describe how long they've been working together, how they know each other, because this is really important, especially sort of when and if problems come up.
Do you think that the hedge funds because one of my pet peeves is that hedge funds have a very unfair reputation, that they it's this like greed game and everyone is very rich because some people are clearly very rich. The best paid people in the world are hedge fund managers. I think George Soros made over $1 billion one year. And it seems that there's a number of issues. First, there's quite few hedge funds. There's anywhere between 7,000 and 13,000, depending on who you ask and how you define it. You seem quite down on new funds because most of these funds that are established, that are well known, were started in the early 90s. So are you? Is it almost impossible to start now, or is it?
I'm not down on new funds. Actually, sort of new funds. There are academic studies that show that new funds consistently sort of outperform older ones. I'm not down on them at all. I just, the reality is that 80% of them are going to fail or close down for one reason or another during the first 2 years. So people should think like long and hard sort of before they take the step.
Yeah.
That's all. But I'm not down on them at all. I mean, we've invested in startup hedge funds before, but again, we've never invested in a sort of startup hedge fund that was like a pure sort of standalone sort of entity. It's always been a startup that was part of a larger organization where we knew that there was going to be enough backbone in terms of sort of the infrastructure supporting the traders.
Can I ask you, what about the shoe on the other foot, if you like, the other side, as if someone who wanted to invest in a hedge fund, then, is it like the old story about with mutual funds, you just find the top 3 for the last year and you invest in them, and and history
Oh,
shows
no.
that on average you'll do better. Does it work that way?
Oh, no. I mean, today, I mean, if you look at institutional clients, pension funds, endowments, I mean, these are the biggest investors in hedge funds today. And they are very, very slow in terms of making an investment decision. I mean, they might be looking at you for a year before they allocate any kind of serious capital. You know, these are very bureaucratic organizations. You know, the number of hoops that you're going to have to sort of go through to get on their is incredible.
Yeah, and one thing you're mentioning is the bureaucratic nature of it, and I know me and Ed has touched upon a little bit on the George Soros of the 92 at that time, and you had this like this reputation for hedge fund of being these like kind of like wild prop trader kind of. They have these very specific.
That's because the investors were different.
Yeah, that's what I mean. And investors now are so risk conscious, and you have only You have only these very risk averse type of investors. So that kind of hedge fund hardly doesn't exist anymore.
That's true. That's that's a big issue. I mean, I think hedge funds are so concerned with managing their volatility and the risk that far more concerned sort of than was the case 10, 15 years ago.
So, would you think if George Soros was starting now, would he be setting up a hedge fund, or would he be a proprietor? Would he be someone like me as or private money, or would it be would he be a private trader? I mean, what would he be doing now? Do you think?
That's a very good question. I mean, I'm not sure.
Maybe we should have him on and find out.
Oh yeah, I think I can get him on actually. I have a 1% chance. It's better than 0. But you sent me an article, Ed. Do you want me to pull it up on the screen?
Yeah, do. You did, about George Soros wanting to invest in the finance sector. It's interesting. I own, some people will be aware, if they follow me on Twitter, will know that I've been heavily into banks in the last 3 years, buying like the Citibanks and Lloyds and buying up the propped up government style banks, just because the value. I mean, it goes back to, if you buy enough banks, then okay, if one fails, and I'm talking about quite serious major banks as well, if one fails, then at least the amount I make on multiples are going to cover the risk or the loss elsewhere. And what is interesting is why George Soros would be buying banks now, or if that's a real story. I mean, this is, again, it touches on what we talked about analysis paralysis, when people are supposed to be doing things, and do you go with it? Do you understand it? Do you investigate it anymore? But if George Soros is buying banks now, I mean, what does that say? I mean, to me, I'm still holding some of these stocks. So, Michelle, what do you think?
I don't know. I'm highly skeptical of any journalist or newspaper article which claims to know what sort of George Soros is doing or not doing.
I'm supposing this is based off of the 13F. It's a Der Spiegel article that on Sunday, where he said, "I believe in the euro. Therefore, my investment team is looking forward to make a lot of money soon in Europe by, for example, pumping money." That's actually a quote. "Pumping money into banks which urgently need capital." He added, noting the Eurozone needs this kind of private investment right now.
Maybe he's buying Greek banks.
Yeah.
I don't know.
Yeah, I mean, well, maybe he should be buying Greece. I mean, he's of that size, isn't he? I mean, what was the, was it? I can't remember. What's the someone pointed out that the whole of the Greek stock market has a valuation less than one or two, and quite a few US corporations. I mean, it's frighteningly small. It is really of a small size. George Soros could probably buy entire Greece. No? I mean, what's the size? Do you know the capitalization of the Greek stock market?
I don't know the market cap of
I'm checking.
Greece off the top of my head.
Oh, I'm disappointed, Michelle. I thought you knew all these facts. But yeah, I think Greece represents great value. I mean, again, disclaimers, disclaimers, disclaimers. But it's a little bit esoteric and dangerous for me to do anything of any size. But I'd be interested in dabbling. But I'm just interested to see if
the Greek banks have had a tremendous run, sort of last year and even this year. I think it's Alpha Bank, which is up like 24% this year, and
I have the number.
Nothing. But that's not. I mean, 24% is big. Don't get me wrong. But we're talking its potential. This is maybe where George Soros, if he is investing, is coming from, because they've been so.
I mean, I've spoken with hedge funds that think that the Greek banks could easily sort of double.
And the rest,
next, 12
how much
months.
they've fallen by. I mean, how much would the Greek banks, if they went back to their previous crisis level, we're talking multiples of what? Five, six?
Yeah.
So I have some numbers here. Facebook.
But you can say the same about.
No, I have some
Italy.
numbers on Greece here
Okay.
before we. So the market cap of Facebook is 174 billion. The market cap of the total Greek stock market, at least by some IMF indicators I have here, says 151 billion. So it's about 20 billion less than Facebook, which is astounding.
And how much cash does Apple have?
Apple has about 150 billion. Seriously. And if we would go back to pre-2008 or pre-2009, I think, the Greek stock market was approximately almost 6 times larger than it is now in terms of percentage of GDP, and GDP has dropped at the same time. So.
Yeah.
So people sweating over where the euro is going today for the next 20, 30 pips, and you could be talking dimensional trades. And it's kind of, that's when it gets interesting, and why it's, interesting following people like Michelle, and certainly structured research, because there's some really interesting stuff out there in terms of real big plays. You can listen to me about...
there are a lot of event-driven funds and distressed players that have taken big positions in the Greek banks. So if you look at the composition of the share ownership, it's like completely changed compared to what it was pre-crisis.
Could that be self-fulfilling? In other words, because these investors are going to.
I think that's actually a good thing, because when the distressed players, when the event-driven players come in, they're not sort of looking to flip these positions in the short term. They're clearly there sort of for the workout. And
therefore they're more likely to put pressure on them being managed well, and in some ways where the distressed players are coming in, the risk is much less.
Definitely.
And so what credence would you give to the George Soros story then?
Oh, no comment.
Who wrote that? I have to see.
All right, let's put it another way then. Could George Soros be interested in? Could George Soros be interested in buying banks right now at these levels? Theoretically,
sure.
Do you think it makes sense? It could be made sense.
Sure. This is. Sure, he could be interested, like anybody else who's looking for undervalued assets. Yeah, of course.
Okay.
Buying Greek debt has been a big play in the past year. I'm looking back in. You mentioned the structured research, Ed. There was, which is sort of a service run by us. It's sort of loosely part of BIGtv, and we had a bunch of stuff on the best performing hedge funds of last year, and one of the interesting funds is a special purpose fund. Which is, I believe it's Algeberis. Is that the one?
No, Dromius.
Yeah. I'm just looking back to get. It's a fund that is set up only to invest in Greek debt, and I'm pretty sure it's up 100% last year. Am I right in those numbers?
Yeah. Yeah, I think it's 90% sort of since inception, sort of
Yeah.
over the past 18 months, something like that.
Yeah.
But it's been, you know, a phenomenal call. And
So let's
if anybody has access to the FT, to the archives, the FT is like has interviewed these fund managers a couple of times over the past few months.
Okay, well let's bring this this back, because I think Michelle's got to go. Is that right?
Yeah.
Let's bring it back full square, because what we're talking about, I think, is the stages from being, you know, I mentioned a guy who comes in and who's going to risk 50 quid on a cable position, or FTSE or S&Ps or whatever. And, you know, there's a learning process through many steps. I think there's going to be a couple of tweets to send out, one of which is at 38 steps to being a successful trader. I mean, and it's worth reading, because most of those steps are really valid. And some of the things you're not aware of, I'm not aware that I do. And as you become through those stages of competence, what's happening is then you realize, you know, you're doing things wrong, and then people like Sverre stop and maybe comes back into trading once you've worked out what maybe you should do better. But at each point, your awareness of what you do and how you're doing it is growing to a point. Then some of the simpler things that you need to do, the basics, you actually start to do unconsciously. You don't think about it, but you're always still aware. And in fact, what you're saying is, from a trader, being a trader to a hedge fund, you jumping another level of awareness in terms of running a business, of running a risk business, and how you quantify the risk, how you present your returns compared to your risk, of how long you need to do that and to who you need to do it, is on another level as well. So there's a progression, all these steps, from being the guy with 50 quid in his pocket, having a punt on the DAX, to someone who's the George Soroses of this world, you know, 150 billion to play around with and buy the whole of Greece. There's a massive learning curve in terms of the steps. But if you keep going, it's doable. Isn't that how much did George Soros start with? Didn't he start with 50 quid in his pocket?
I think it's self-made, isn't it?
Probably, something like that.
That's a good question. I never...
Yeah.
He's probably still got it.
You like George Soros. Here's a quiz. What's his real name?
I know. It's stupid. I did know that like 3 days ago, and I've forgotten. That's not a good question.
It's I don't know how to pronounce it. Georgi Schwartz.
Yeah.
Anyway,
Schwartz.
he moved to London. Well, he started quantum funds with Jim Rogers in '69, so he's been around for a while. And he grew up in Hungary, moved to London in '53, New York '56. Did you kind of skip all those steps between? Stupid Wikipedia.
I mean, there's actually a great quote which I would challenge you to find, because we've used it before. I mean, in fact, I think we used it last show or the show before. Jesse Livermore, about trading as a business. Anyone, if you recognize anyone, I think it goes something along these lines, anyone with any intelligence who's willing to put in a lot of hard work, and then recognizes that trading is a business, you say a hedge fund, managing a hedge fund is a business, will do well. And then if you know that, if you're willing to put in all the hard work and to follow the steps, you know, recognize there are steps, and then they will be different, but follow the steps and pursue, you know, keep persisting, and you're rigorous about it, then as long as you're hungry, then you'll succeed, I think. And that's the beauty of the great pioneering industry that is trading, that is hedge funds as well. I think it's arguably the most accessible, the most, or possibly most demanding. I tweeted something on the weekend about being the most demanding profession there is, but it's also the most exciting and arguably the most rewarding as well. So, perseverance.
If you continue a little bit more, I can pull up the quote.
Yeah, go on, go. See, I compare, see how my memory is.
No, but it's good, it's perfect. It's I believe that anyone who is intelligent, conscientious, and willing to put in the necessary time can be successful on Wall Street, as long as they realize the market is a business like any other business. They have a good chance to prosper.
Yeah, that's very good.
No, that's Jesse Livermore as a mantra for anyone running their 50 quid in their pocket footsie punting to George Soros. People like that are managing significant businesses and risk. And good luck.
Yeah. There you go. Better late than never. So, but I think that's a nice wrap up to this show here, and I want to thank Michelle and Ed for both taking time
thank you.
to come along, and we're going to continue on the stream. So the idea is to do a pre-show, a show, and just continue on a little bit more, and then we can just talk a little bit more. And but this ends the recording. It was a great talk, and we covered the gambit from starting with the 50 quid up until the guy who's trying to raise 50 million. So thanks both of you for coming along.
Thank you.
Welcome. No, cheers. Good one.
Cheers.
So let's end the recording, and that was really good, wasn't it?
Okay.
I'm going to pull you up here. Can you stay for a couple of more seconds, Michelle?
Yeah.
And let's see. I'm going to see if I can pull you up next to me here. Let's see.
It's interesting though. It only struck me. I mean, it sounded created and fabricated, but it just struck me about the graduation of like the overhead. I mean, the awareness of what you do, but also your overhead is growing. Yeah, I mean, they're probably.
I mean, the reality is that even with like 50 million or 100 million in AUM, I mean, you're barely going to be making any money. Wow, once you sort of strip out your overhead, your startup costs, your legal costs.
So why does anyone start with?
Oh, they do because because nobody expects to stay at 50 million. No, I mean, everyone sort of thinks that they can get up to 200 to 500 million. I mean, that's the sweet spot.
500.
No, between 200 to 500. I mean, 500 is too much for some strategies. It all depends on what you're trading.
But that's a different thing, Ed. So for trading, size is almost never an issue unless you are literally George Soros. That's like another challenge when you come from being a great trader and all of a sudden you have to think about scalability of your strategy. Do you run into that? Scalability issues?
Me?
Yeah.
Yes, for different reasons. I don't so much, but I know I've got some good mates who have that issue. Who they're doing well. Let's take the guy. Bring it back to the guy who's got 50 quid. Yeah. He's got 50 quid, and he might. Let's say he's earning 25,000 sterling or whatever. He's got 50 quid and he's punting it, and he loses 50. He can take that. Then suddenly he's done well, and he's trading 20 times that, and he's risking a lot more. Jumping up isn't just about strategies because the market's deep enough. It's how so much of trading is about the trader, how they are able to handle it. Suddenly they're down 50,000. Yeah. How they left, that's more than they earn in a year still possibly, but they're managing money or whatever. They're about to lose that. I've some of the sickest times of my life when I've lost significant sums of money or been losing it. And how do you handle that? That's kind of almost going back to their hedge fund point. How do they handle losses of that size in order to take a loss or be willing to sit with a loss and in order to make the profit? Those are issues that you don't ever lose from the guy with 50 quid who's down 20 quid to the guy who's managing $50 million who's down $1 million on a position as we speak. It's all the same conceptual.
And then you have to add to that. How do you communicate with your investors when you're losing money?
That is hard. I've read some of these reports. That's tough.
Exactly. So you have your own sort of emotions to manage as a trader, plus you have the expectations of your investor base, and then you have your colleagues on top of it.
So not only am I doing badly, not only am I losing money, I then have to analyze how I'm losing money, then explain it in a newsletter to my investors. I mean, that's hard. I mean, that's just
Sure.
putting yourself apart, isn't it?
Maybe also sort of explain it sort of to your fellow traders on the hedge fund, because this gets into the whole issue of compensation within hedge funds. And you know, in some hedge funds, everybody has their own book and is just compensated sort of directly according to their own P&L. In others, it's like firm-wide results or performance that determine compensation. So that can also be quite tricky.
Yeah, I mean, I face and have been through similar issues, and you know what other people are doing. You just know. I mean, partly because if you have respect for your co-workers, or that's a strange phrase, your fellow traders, then you know you want to know what they're doing, because arguably they might have some clever ideas you can learn from, or whatever. So you know what they're doing roughly. So if the things are going bad, they probably don't need to explain. What does irritate is when they start bringing the overall performance down, which is your point.
Exactly.
And that goes from a situation of, I mean, that is really black and white. That goes from a situation of, well, they're having a hard time, they'll do well, to a point where you want them out. I mean, that is really quite common and that really becomes difficult. It increases the emotion and the problems within a fund.
Exactly. So, I mean, compensation and how a hedge fund business is structured is a very, very important point that investors look at when they do their due diligence.
And
Seems
sustainability,
almost
because
like an
that's
impossible business to enter. No? It's like a guy, like Ed said, like a guy who's
No,
a
it's
great
not.
trader.
It's not impossible.
What is the average length of investment in a hedge fund? Is there such a stat?
What do you mean by the average length of investment?
How long do investors stay with hedge funds for? On
It
average?
depends. I mean, if I look at the portfolios that I'm running, I mean, there are some funds that have been in there for forever. I mean, they're just core holdings, and then there are others that we maybe redeem out of after 1 year because of some issue. So there's no hard and fast rule. I mean, I think if you think about the time it takes to do due diligence on a manager, to go through this whole sort of process of getting to know them, you don't really want to make an investment and put in the time unless you're going to be sort of in the fund for at least 1 to 2 years.
Okay, so I expected you to say like 5 to 10 years then. Okay, 1 to 2 years is quite short term.
No, I would say 1 to 2 years is like a minimum to sort of justify the amount of work that goes into, getting to know the manager.
Yeah, okay.
How
So
much
it's like,
personality?
to use another analogy, you don't sack your football manager after 3 months. You
Precisely.
give them at least a season and a half to kill themselves, and then they're out.
I have to go and look at some scores. Can I mock you for any football scores now? Did Arsenal play this weekend?
Yes, they did, thank you.
Did they do well?
Yeah, we played a non-existent Sunderland, where it was like their defence had their feet tied up. They were.
Yeah, congrats. Second
We
place.
looked good. And we scored. There's a great goal. Hey, if you want to play a video, get on Rosick's goal. That's sweet.
How do you spell that?
Rosicky. He's
Okay.
he's one of Arsenal's unsung heroes. One of his the most popular players amongst the Gooners, the Heart, because he busts a gut. I think.
Is that the 4-1 goal?
Sorry.
Is that the 4-1?
4-1, and it's the third goal, I think, wasn't it? Yeah, the third goal. Yes, because Koscielny's header was the fourth, so it's Rosick's goal. Okay, but what about Michelle? Do you know anything about FX concepts, or is Michelle gone?
She's there.
No, I'm still here. I met John Taylor a couple of times. We never invested in his fund, so I don't know sort of too much about it sort of specifically. But yeah, it was one of the older forex funds, and sadly sort of closed down last year.
But that was because, I mean, wasn't that because someone, it wasn't it California State started pulled loads of funds out? I mean,
I think so. I mean, it was quite a big organization, and I think the last time I was at a conference where John Taylor was a speaker was probably about a year and a half ago, during the sort of euro crisis. He was like quite negative on the euro. He was like forecasting a breakup, very bearish, and perhaps that obviously didn't sort of play out so well in terms of the trades that got put on by the fund.
You said that, yeah. I was curious because one of the trades I knew, well, not knew, but was aware of or believed he had was short the Aussie, and he was short like $1 billion Aussie, massive,
Yeah.
at near the top. So when I heard that he struggled and whatever, I just thought, wow, he must, if he had the Aussie position on, because
Yeah.
it went down by 8% or whatever, then he must have lost serious amounts of money elsewhere, which is probably down to. And he may have had been, I don't know, maybe short euros, long Aussie or something, and his, whatever. It may have been something like that. I don't know. But I was curious because, obviously the California State is an institution, and they were probably with him for quite a long time.
Yeah.
And also from what I understand...
that's the kiss of death when one of these big pension funds or institutional clients pulls out.
Yeah, which is where I was coming from, about how long they hold. And also, they may have a vested interest. Which bank is it? Is it Credit Suisse or Swiss Bank? One of the Swiss banks is also heavily into that fund, but also are staying with him and helping to resuscitate that fund. Is that right?
I don't know anything about that.
Yeah, I see. I think there's so, you're talking about people who are with someone for a long time, and the proverbial hits the fan, and some of those investors stay still and help them back. Now that's quite impressive, I think. I mean, it's a bit like your distress funds going into banks, or it's even more.
Yeah.
Someone's been, obviously maybe they're just trying to rescue the situation, but also it sounds like they believe in him and are trying to revive the fund and the future. So they may be trying to throw good money after bad, or it may be because they truly believe, and that's impressive.
Yeah, it can be for many reasons. I mean, in the case of FX Concepts, he was trading the most liquid of instruments, but sometimes, especially sort of when a fund is trading less liquid credit or emerging market positions or distressed, investors will prefer to sort of stay in the fund when it goes through sort of a rough patch, and rather than having the fund sort of liquidate its assets at fire sale prices.
Interesting. What it does suggest is a lot more to hedge fund management, not necessarily trading, than your P&L, than your profit stream.
Absolutely. And I mean, hedge funds, they're the biggest sharks around. And when they sense that somebody is in trouble or has like a short position that's going against them, or they're stuck in a bad long, they will gang up and go on and take the other side of the trade.
Okay. It's nice to know there's some nice people out there.
Yeah.
You can take that. You can keep that. I wouldn't ever. Yeah. Okay. I mean, there's a way of making money. There's a way of making money. Yeah, I don't want to make someone cry.
Sorry, what did you say, Michelle?
Yeah. I'm sorry, Sverre. I'm afraid I'm going to have to go. I'm
no,
like
that's fine.
coming
That
up
was
against.
Great. And I like the concept of doing a post-show and a pre-show, and it works quite well. It's nice to just talk.
Well, it is, because this was unplanned.
Yeah.
So it's kind of.
we need to, we need to talk about, there are a couple of like interesting sort of distressed situations in the markets right now that we need to,
Yeah.
talk about.
But I guess we have to postpone that tomorrow until
yeah,
tomorrow. And
maybe
tomorrow is
tomorrow.
good because I guess Ed, you won't be here tomorrow.
Correct. Yeah.
Yeah, so we can do
Okay,
the
good.
structured research at the same time then,
Okay, great.
because that's yeah, in terms of time planning. Let's Ed, you have time to talk for 2 minutes afterwards?
Yeah.
Okay, I'm gonna just air some some Livesquawk, and we're gonna continue
Okay.
on more. Thanks so much, Michelle, and thanks so much, Ed.
Thank you.
Cheers.
Bye.
Bye.
Bye bye.
Okay, I'm calling you back from the other computer.
Okay.
Cheers.
Pfizer reports positive top-line results of Landmark, and Kellogg's announces a debt tender offer. So Kellogg has commenced the tender offer to purchase for cash up to $700 million combined aggregate principal amount. And Pfizer says study achieved its primary clinical objective and both secondary clinical objectives on this particular drug. So top line announces positive top line results of Landmark community acquired pneumonia immunization trial in adults evaluating efficacy of Prevnar 13. This euro continues to drip lower again now, 37.28, having stalled around that mid 60s region, 37.65 area, and then just saw lack of follow through buying, it would seem. Cleared some stops down there. I mentioned, I think it was talk of stops sub 40, around the 40 region, which we have since cleared. 28 trade last. More stops building below 20, we hear. Comments then by central bankers. The European central bankers seem to have more effect on the euro than it does on the fixed income at the moment now. Really, you've got Schatz yield at 0.125%, hardly moved. Peripheral debt is it was doing all right. It's not. It's still at the top end of the range in terms of the yields. Spain yields at 3.555. We've got Italian yields at 3.615. Obviously, Spain did benefit from comments over the week, or the upgrade to its ratings from Moody's this weekend. Moving to Northern Europe, then Norwegian krona strengthens by a 0.7% here. 2.5 bump highs seen around that 8.29. On the follow here, we take a look at 6.0374 for dollar krona. It's down 0.6%. At euro krona there, 8.2860. So you got Russia's Prime Minister Medvedev just saying withdrawal of ambassador reflects the unclear situation in Ukraine, presence of threat to Russia's interests and lives of its citizens. Speaking via Interfax there, that's Medvedev, Russian Prime Minister. Taking a look at some of the larger option expiries to come through today at the 10 o'clock fixed Eastern Time. Dollar yen expiries at 102 even in 700 million, 102.20 and 400 million, 102.50 and 400 mil. Euro dollar expiries there 36.75 and at 1.38 even. Cable expiries at 1.66 the figure, 66.75. You've got Aussie dollar expiries at spot 89 in 100 mil, 89.35 in 200, and spot 91.25, 91.50. Dollar CAD there at expiry in 250 at 111. Euro sterling expiry there at spot 82 even in 250 and spot 82.25. Euro Swiss expiry at 1 spot 21.75, 22 even, 22.60. Energy-related news here. You got Russian Prime Minister said that any extension to gas agreement will need to be negotiated with Ukrainian companies and government. I just pointed out the Commodity Futures Trading Commission on the CFTC data for the period ending Feb 18th has just been released. The latest report showing on Treasury's speculative accounts of paired shorts or added to existing longs for the most part. Exceptions were in the Eurodollar and Ultra Bond futures, where the group added to shorts while they reversed existing longs in the 2-year note to marginally short. So I've noted on the monthly index there, we've got a very strong month coming through for treasuries this month, 0.12 years.
So Peter Weinberg on CNBC says mega deals may spur other M&A transactions. More from Weinberg. It says low rates mean cash is best now for purchases. Okay, while we're on the subject of deal making, there's a story doing the rounds over here. Well, just hitting the wires rather. KKR and Invest Industrial asks bank to pitch for IPO of Avincis, the helicopter manufacturer. Apparently, it's worth about $3.3 billion, according to Reuters. Helicopter services firm Avincis could be worth up to 2 billion sterling, according to sources. The companies refused to comment, or not immediately available to comment, on the back of these headlines. Avensis, KKR, Invest Industrial, not immediately available for comment. Okay, we're getting energy headlines on the screen now. US nat gas front month futures rise over 5%. This is on short-term cold. It's the highest price since December 2008, according to the headlines here. Right, some news on Men's Warehouse here. It increases cash offer for Joseph A. Bank. Offer increased to $63.50 a share. Men's Warehouse says advances expiration date of amended offer to 5 p.m. on Wednesday, March 12th, 2014. This extended offer is conditioned on the termination of Jose Bank's agreement to acquire Eddie Bauer, however. Men's Warehouse increased its cash tender offer for all outstanding shares of Jose Bank Clothiers from $57.50 a share to $63.50 a share. David, the diary. Tomorrow, Spain's Treasury will issue up to €3 billion in T-bills. More from Men's Warehouse could potentially increase price to $65 a share if the company is able to conduct a limited due diligence with access to Jose Bank's management team, apparently, as according to Reuters. Here, just ahead of the US Open in about an hour and a half, we're getting headlines pointing out BlackBerry shares up about 5% now in the pre-market trade. So US traded BlackBerry shares. Bit of brokerage news. Goldman Sachs on Baidu raising to a buy versus a neutral. Bit of deal-making news. Oracle has purchased a company called Blue Kai, although no terms will be disclosed. So another few headlines coming out of this Men's Warehouse Jose Bank story. Men's Warehouse alleges that Jose Bank's board breached fiduciary duties. This is being reported by Bloomberg. Men's Warehouse seeks Jose Bank's board to rescind the poison pill. Comments from Denmark Central Bank, a debt spiral unlikely unless deficit worsens. Okay, fixed income related news. ESM's 7-year new bond marketed at mid swaps plus 9 basis points. That's according to Reuters. And more on the Men's Warehouse story. Men's Warehouse commenced lawsuit in Delaware. This is against Jose Bank's board, and as well as Golden Gate Private Equity. Okay, we've got Italy's Renzi's on the wires now. He's in Parliament outlining his government programme. So expect to hear a few headlines from him before that vote. Italy is living in difficult times, says Renzi. The Italian economy needs to exit the swamp, says Renzi. Renzi says radical changes are needed at this moment in time. So we're getting a re-airing of this story now, this time on Bloomberg. Avincis said to be planning an IPO worth $3.3 billion. Renzi, EU presidency is a big opportunity for Italy. Let's have a quick look at BTPs. You've got Italian 10s currently at day's highs in terms of yield at 3.632. This morning we were around about the 3.57 mark. Renzi says his party doesn't fear elections. Says we'll stick to the timetable of electoral reforms agreed with Berlusconi's party. Renzi, current election law doesn't guarantee government stability. Okay, in the pre-market trade, Men's Warehouse up about just over 5% now. This is following the raising of its cash tender offer for Jose Bank. And Jose Bank up about just shy of 9% in pre-market trade. On the half-hour mark, we do have a little bit of data out of the US. We're getting the National Activity Index for January. No forecast for this particular reading. However, the prior came in at 0.16. 0.16.
So this is structured we're sitting here with the interview. We have a sort of a weekly interview session where we talk to people we find interesting that might or might not have a direct relevance to finance. I think this topic here, I have a personal interest in this topic because, well, I'm going to get into that later, but I have I have an idea that this could be quite relevant for finance. So without any further ado, I want to introduce you to James Fallon, and maybe you want to introduce yourself. You have quite an extensive resume.
But I'm a simple guy, Severi, so I'll keep it simple. Yeah, I'm a neuroscientist, and I've been at the University of California Irvine Medical School since 1978. So I'm a little long in the tooth on this, and so I've studied a lot of basic neuroscience, a lot on adult stem cells, but also done a lot of genetics and imaging on psychopathologies, including schizophrenia, depression. We look at the brains of people who've committed suicide, but also addictions, a lot of work on addictions. And we use things like PET scanning and functional MRI plus genetics into a mathematical model. And that new field, the past decade, is called imaging genetics. So we do that for clinical trials, but also for studies that are pretty far-ranging. And we look at memory and of different kinds of memory and emotions, et cetera. And I do a lot of the neuroanatomy and the interpretation of the genetics with the neuroanatomy. So that's really what I do on a day-to-day basis.
So if I'm going to translate this to sort of more conventional way, is this when you take an image and you have these colors? Because I've seen some of the work you've done on yourself and your family. Is that your field?
Yes.
Yeah.
Yes.
So I was listening to Canadian radio of all things, and well, you popped up. So it all started I was in San Diego at a conference, and I started talking to a Canadian researcher, and I mentioned that I have an special interest in psychopathy, namely because I'm the opposite. I'm very much not a psychopath. So I feel like this is interesting from the opposite view. I want to know what I can't understand, really. And out of the blue, this guy sent me an interview with you, where you made some quite astounding remarks about yourself. And it's also in your book. Do you want to tell us a little bit about that and how you came to those conclusions?
Yes, it's purely by serendipity. Back in about 2005, 2006, I'd been finishing up a study on psychopathic and impulsive murderers, mostly psychopaths, and some of these really bad guys. And during that, I saw a pattern, and at the same time, it had nothing to do with the murderers per se. We were finishing up a study on Alzheimer's disease to look for the genetics and imaging brain patterns for Alzheimer's, and we had all the subjects we needed, but we needed controls. And we hadn't done a whole family. And that combined with the fact that my wife's mother and father had just died of Alzheimer's, and a lot in her family have it, but she has no signs of it. I said, why don't we give it a try? And she went along with it. It was, I thought, rather heroic to even try to find out this. But she said it would help the kids and grandkids and their lifestyle, what they eat, all that sort of thing. And so everybody agreed. And when we did that, the great news was that everybody in the family came out with kind of a normal range of genetics, normal PET scan, and psychometrics. That is, their actual behavior and how they tested on certain things like reactivity and emotional responses, except one. And it was the last one I looked at, and I looked at that, and it was very pathological. So I just asked the technician to check the PET scanner. I just assumed it was taken from the wrong pile. It was really one of the murderers because it looked exactly like kind of the worst case murders I had been looking at for some years. And they said, no, he came back. It's part of your family. So when I peeled back the code, it turned out to be me. It's
and this is the colored. Is this chart that I'm showing now?
Yes, right. And for imaging, for brain imaging and body imaging, the standard use is that if an area is hot, that is very active metabolically, if its activity is hotter than normal or hotter in one condition than the other, it looks red or yellow. So the red or yellow, the hot colors, are areas of the brain that are highly active. The ones that are in black, there's no activity, but kind of the blue and the green means really significantly lower activity. The one on the top there, the arrow is pointing to the frontal lobe. And so the person would be facing, that person's head would be facing to the right. And below that is the same task, which involved emotional and non-emotional pictures. You can see mine, and this one looks just like what you'd see in a psychopath or a psychopathic murderer. And it's those parts of the frontal lobe are just turned off and really low. And also, you can't see in this slice, but the amygdala at the front of the temporal lobe is also low, and the area in between, which you don't see right here.
I think
here
we
go.
see this in this image, don't we?
Right.
Yeah.
Okay. Yeah. And you can see there's 1, 2, 3, 4, 5, 6 people in those columns, and the rows show a cross section, and the cross sections at the top go through the amygdala, and you can see way on the right that mine, it says Jim, is low and splotchy, and that's very abnormal, whereas everybody else is quite normal. And on the bottom row is that same side picture, looking from the side, and you can see that although much of my brain looks normal, that part of the frontal lobe, and although you can't see it, the temporal lobe, is quite abnormal, and that's the psychopathic pattern that. After I published this, other people have reported this in the past couple of years. So it looks like it's probably, a good estimation of what the so-called a psychopathic brain, but it's consistent with it. If you have this pattern, it doesn't mean you're psychopathic, but you probably have the traits that are consistent with this. And then below that are the EEGs from the top of the head. And then below that is an example of the genetic analysis, and we did many of these. So that's the example of the profile. And so on the top there, yeah, the reds and yellows are highly active, and the blues and greens are poorly active. The below that, the EEG show coherence, which that is if you do EEG and look at the alpha wave during rest, those areas that are synced together electrically, the resonating like an orchestra, are the ones in red. And you can see mine on the top of my head is very good. I have a very high amount of resonance. And the others in the middle there show less so. But that's just to show the upper areas of the brain. Whereas my problem, and the problem with psychopaths, is at the lower half of their brain where there's very little activity and it's poorly regulated.
Okay. So I have to ask a stupid question. Does that mean you're a psychopath?
No, if you just look at the genetics alone, or you look at the imaging alone, you can't tell if somebody's a psychopath. But you can look at these and guess their behaviors and traits. And so somebody who has that pattern, like mine is on the right, you would expect that person to have poor impulse control, probably a compromised sense of morality, and also a compromised sense of what's called emotional empathy, not cognitive empathy. Cognitive empathy is you understand how people are feeling, but you don't feel it yourself. But most of what people want from each other at a personal level is this emotional empathy, and that can be inferred from both the genetics and the brain pattern. And in fact, in me, it's true. So my traits follow that, but the actual determination of psychopathy, you've got to look at the behavior. So just the genetics and imaging alone won't get you there, although together they're pretty powerful. It's a really good hint. But taking genetics or the imaging into, let's say, a court of law, it's not ready for prime time yet, because by themselves they don't really tell you that, but they indicate certain behavioral traits are probably there.
So, but you looked in your history, as far as I understood from the book, and I'm gonna buy the book immediately. I did not, for some reason, I did not read this book, and I've read at least 3 or 4 psychopath books. I don't know why it interests me so much, but it just does. and I really want to read this. And as I was waiting for you, I read a little bit of a synopsis of the book, and you mention both in the interview and the book a little bit about your family history, which is, let's say, unusual.
Yes, it is. You know, at about the same time that I found our family scans and mine, and saw the genetics. My mother, within a couple of months, it was in 1 or 2 months of that, my mother showed me a historical book that had just come out that my cousin, who's a newspaper editor in New York, found, and it's about my father's side of the family. So of course my mother, who's a Sicilian fully, she loved this because here is the British side. There's where the problem is. So I read it, and it was about the first case of the murder of a mother by a son. That is what's called matricide, and the first in the colonies, the American colonies. So that was back in 1667. But she told me to read further, and we sat there, and there was a line of these guys that were murderers, very ill-behaved people who left their families, etc. In that line, it's the Cornell family. And, one of my cousins is Ezra Cornell, who founded Cornell University. And in fact, there's a lot of ministers on that side too. But in addition to the ministers, there's a lot of murderers that are not only there, but on other lines, as we found out, in my father's side. So there's 4 lines on my paternal side, which have a very high percentage of murderers, but they tend to just murder their own families. So it's a kind of a peculiar thing. This is a little disquieting for my wife, But
I'm sorry for laughing.
So
but
my doors are all locked from the outside now. So, but anyway, so there's this ancestry. But if just because you have murderers on a line in your family, usually after 2 or 3 generations, it washes out. But in this case, there are 4 lines that are convergent. One, by the way, a direct grandfather from Norway.
Really?
And so I'm going to blame it on the Norwegian side now, because I'm getting too much heat when I talk about the English
Do you know where
side.
in Norway he was from?
What's that?
Do you know where in Norway he was from?
Well, he was from what would be Bergen, near Bergen.
I knew it. I knew you would say
So
that.
yeah, I mean,
yeah,
right?
no surprise there. No surprise.
So at any rate, but now what we're looking at, we've just started a research project to see if in fact there are these jumping genes that have to do with social behavior, and it looks like from a paper that just came out that the ones that do jump generations, that is this whole field of epigenetics, where you may have a tagged set of genes that control a behavior, that the ones that jump generations, they might control obesity, etc. So you may be mirroring what your grandmother or great-grandmother did, even though your behavior is not that already, but you're set to kind of be ready for it, I guess. And but they seem to be a lot of social behaviors, frontal lobe related, which is kind of interesting. So it's not just that you get the genetics for violence and aggression and lack of empathy, along with familial behaviors, but the combined effect, that is the combined the epigenomic effect, may reinforce itself by jumping. So this brings the whole idea of transgenerational violence and how inheritable it is on a couple of levels. And so we're very interested. I became interested after writing the book. I said, what am I going to do with this information? So I'm kind of dedicating my research in the next 10 years or more to tracking down the effect of bullying, tracking down the effect of early environment, but also how it's involved in immigration patterns, etc. To see if we can get to really the combined genetics and what behaviors affect it. What percent of people, especially kids, are susceptible to bullying and abuse? It may be only 20%. It's not everybody.
To be the bullier and to be the abuser?
I'm sorry?
To be the bullier and the abuser? Or to be bullied or to bully?
To be bullied. the impact. You know, there are many people who are abused and bullied, and even though they're angry and upset, they don't go on to develop psychopathy or other personality disorders.
I understand.
So they don't turn in, that doesn't necessarily make them violent. So it's like many people, it's very difficult for many people to get addicted to substances. You know, 20% are like, they have patterns almost like they're born addicts. And so that doesn't mean it's a death sentence, you know, but it's the tendency is so strong. So, you know, you want those people to end up becoming addicted to running and skiing as opposed to drugs.
Yeah.
But, you know, these things are a large chunk of it seems to be genetically loaded. And this may be involved in, you know, violence and aggression and how you bond to people. That doesn't mean that if you have those genes that you're going to become that, but you're going to have the traits. But if you have early abuse, you know, right around the time of birth, after a couple of years, or abandonment, then it looks like it's trouble.
So I have a question. I don't mean to wean off because this is an incredibly interesting subject in itself. But I recently read a story about the Unabomber and how his first year of life affected possibly his whole life, where he had some horrible illness and he was isolated for I think 6 months or something like that, a very long time for a baby. And they say after that he became introverted, and that they suspect that destroyed his whole life. And as a baby, just days alone can be enough to severely alter your life. Is it stuff like that you're talking about?
Yeah, and it's, you know, the most susceptible times in your life for these epigenetic modifications, that is, the genes that you have can be modified to be turned off almost forever or turned on inappropriately. That happens at the moment of conception.
Oh, wow.
So your genes are very vulnerable at the moment of conception, but also at the moment of birth. And so that's the peak time. And so if you look at the third trimester, the days of birth, and then the first 3 months after birth, that is the fourth trimester, those are the peak areas where abandonment, abuse, toxicity, maybe a mother's alcoholism or drug abuse or whatever, but also the father's effect and the mother's effect on the child is really at a peak. After 2 or 3 years old, the effect of abandonment and abuse really goes down, you know, until about your puberty. It can still be an effect. It's not that it won't affect people at 5 years old or 6 years old for their later life. But it just may not be a permanent laying down of a personality disorder that is violent or very dangerous, like in psychopathy or even borderline personality disorder, some forms of schizophrenia. So that's the idea, is that's the vulnerable period right around birth and the first couple of years after.
But if you look at you, this is one of the things like why I found your story to be so incredibly interesting. You've described yourself as a psychopath, have you not?
Well, yeah, the way that the tests show it, but more importantly, all the psychiatrists, clinicians who have known me for many years and who know my kind of bad behaviors or things that people don't like, they all kind of agreed that I do psychopathic things, and I just never put it together until like 2 years ago. And when it actually started, the whole thing started after I gave a talk in Oslo. And that's where your former prime minister, you know, he had come out bipolar, said he had bipolar around 2001. Right. And he was brave enough to come out because, you know, in Scandinavia, Norway, it's not considered a usual thing for people to publicly say that they have a psychiatric disorder, especially a politician, and especially bipolar or depression. And he did a very brave thing. And so he gave a talk, and then I was asked to come over and give a talk on the kind of the science of depression. And we had another clinician there. And during that, I met with some psychiatrists and geneticists, as you know, during the talk, but after the talk, for hours afterwards. And they said, you know, you may have a problem, not only with a certain kind of bipolar, and it's a bipolar that is identified as such in Europe, especially, and in Norway, but not so much in the United States. because I'm hypomanic and I don't show a lot of depression per se, but it's still bipolar. But they also were concerned about the psychopathy. They saw that my genetics, the progression of my disorders from childhood onward, because I had them all listed when they occurred, and my brain pattern and some of the behaviors when I was talking to them, because these guys were experts. So that was a few years ago. After that talk in what was it, 2.5 years ago, in Oslo, and then I came back home and started asking everybody, because that's the first time it started to really be interesting to me, because I didn't care before. Then it was like, geez, maybe I really have this. So it's maybe not the theory is wrong. Maybe I'm wrong about who I am. And in that process, I found out I'm not exactly who I thought I was, which is why I wrote the book. I thought it was important for people to know, hopefully, some of the science, the brain science, the psychiatry, and also the genetics, and the personal story, and how you can be fooled by somebody. And the way I test out is not as a full-blown psychopath, a categorical psychopath, but a borderline. And I have a group of traits that are called prosocial. It sounds like a nice term, but it means it's not always nice. It means I can get along very well in society, and I can be, glib and charming, not like now necessarily, but
But do you have superficial charm? Is that what you mean?
Yeah,
because I've read that term too. Yeah. Okay.
And and always being on the make. Being on the make is that I'm always trying to manipulate people. I don't even have to think about it. I'm always doing that. Not to get people into bed or take their money or anything like that, but just to have them fully buy into my world. It's a kind of machismo, I think. And it's a narcissistic world where you just want, even for 5 minutes, an hour, that people will buy into this little world you've created, this sandbox. And that sort of thing when it's not necessary. Salesmen are supposed to be glib and charming and manipulative, but it's for their job, and everybody knows that. When it's out of context and you're doing it, then it starts to go into the realm of psychopathy. So these things by themselves are normal, but it's if you do it all the time and it's out of context, when you're not supposed to really be doing it socially, that's when it becomes problematic. And I have a lot of those traits, and I began to do them very automatically throughout my life. And, I can normally be a very nice guy and, sort of interactive. People, strangers like me, but you don't want to be married to me. You don't want to be, you don't want to be my mother necessarily, or my sister, or even my brother, or my kids all the time, because I don't treat them any better than I would a stranger. And so even though I'm not, necessarily cruel or mean guy or manipulative in the sense that people don't want it. I mean, I think a lot of people just like the game, it's playing in the sandbox. But people close to you, this is not what they like. And I was really very interested when I heard Nelson Mandela's daughter talk at the memorial, because, this is a great man who sacrificed a lot and did a lot for the world. But he was, as she said, he wasn't the greatest father. And if you look at Gandhi, it was the same thing about his family. He was saving the world, his people, but he was not a good family man at all. He just didn't have the interpersonal emotional warmth. It wasn't there.
This is an incredible statement you're making, because, I mean, I've been talking to a friend of mine about this very subject, about why are so many great men apparent like bad to their families, like bad people, for lack of a better word. And famously, Alexander Graham Bell was a very bad guy. He was not a friendly man, and he was very rough in business, and he was a bad father, really. And what you're saying about Gandhi and Nelson Mandela is kind of amazing, but it also makes sense, because it takes a certain kind of shrewdness to get ahead in life. And can we talk a little bit about finance and psychopathy?
Well, sure. Yeah, that there's probably some interest that the financial community should have in this.
So let's start with a movie. Wall Street. Have you seen it?
Yes.
Is he an accurate psychopath, Gordon Gekko?
No. I did a BBC show with Kevin Dutton, and we went through different people who were not only leaders, but people in film and TV. And in his case, he was doing what it was appropriate for his job. I mean, we hire people to win. We hire leaders basically to win. We hire investors to win for us. We hire our in extremis soldiers to win for us. And so I think it's very curious that we get angry when they act like winning at all costs, because that's a lot of times what we really want. Not everybody, but if you really if you go through and you have common experiences about what people will tolerate, they want their people, their guys and gals who are leaders and investors to win. It's like, okay, I don't like anything unethical or immoral, but if you get me a few bucks, that'd be great. I'll look the other way. There's a little bit of that, not in everybody, in a lot of people. So we like that. And if you look at, a study that was done on a major psychopathy trait, it's called fearless dominance. And the fearless dominance was ranked by all the biographers of all the U.S. presidents. And that just came out. And in that, it was kind of interesting because the highest fearless dominance, that's psychopathy trait, it was in Theodore Roosevelt, and number 2 was JFK, number 3 was FDR, Bill Clinton was number 5. And if you go all the way down the list, toward the bottom were people like Jimmy Carter and Gerald Ford, which we'd consider mentions, really nice guys, a great heart and everything. But it correlates very poorly with leadership. So the ones that had the highest psychopathy trait, this fearless dominance, were also considered the greatest leaders. So it's something we're doing, at least in the United States. We're choosing people specifically for their psychopathic trait. Not that we don't want criminals, but if they lie, I mean, FDR, JFK, they lied, but we say, well, they lied for us. They saved us. We beat the Nazis because he lied to us, and an imperial Japanese army because of it. So we let them go, but it was really lying, and so we tolerate it if we end up winning. But those kinds of traits of having a winner, I think we're as a society a little bit in denial, because why do we keep voting these people in? It's like, why do we keep getting the same people over and over again?
That's one way to view it, or the other way would be JFK became president because his father basically rigged an election, and they were incredibly savvy people, and it's really interesting when you get to know the JFK they were ruthless people, and especially Joseph
family,
Kennedy.
But people in the United States, and a lot of people around the world still love them. JFK and RFK, but they're absolutely ruthless family, and so there's a disconnect there between our acceptance of what would be psychopathy or psychopathic traits.
But let's talk about, would you name people, like let's say Donald Trump?
Yeah.
I don't like Donald Trump. He seems to be a very bad person. He likes to destroy societies, if you've seen what he done in Scotland. I mean, he doesn't seem, is he a psychopath?
Well, first of all, he's a full-blown narcissist, right? And narcissism and psychopathy, there's an overlap. The thing is that with people like Donald Trump, he's going to tell you, I'm going to get you, right?
Yeah.
He's not sliding around at all. He's absolutely telling you, I'm going to get you. And so that doesn't quite fit with psychopathy, because it says, take it or leave it. This is what I'm going to do. And in a way, he's at the end of the spectrum of what normally we would expect that person to do. As a CEO, to win for his corporations. And so it's right at that point that doesn't seem to make it to psychopathy, because it's just like, hey, this is my job, and you know exactly what I'm going to do. So, it's why do we allow them to happen? Well, that's part of winning. If you're part of either capitalist society or even a socialist mix of society, you want to have winners at some level. So, you don't win really by being a nice guy generally.
Yeah. And a very good example is Al Dunlap. You might know him, not everyone is. Al Dunlap. I don't know if you remember him. He was the chairman of Sunbeam.
Oh yeah.
Yeah.
No, I don't.
He
I
famously
didn't really
was given the
read up on
psychopath
him. I
test.
don't, but I know what you're talking about.
Yeah, so John Ronson, the journalist and writer, famously gave him the, I guess the psychopath test is, what's this, Bob Hare, the Bob Hare,
Hare's test.
yeah. So, I mean, you can say a lot about that test. I could criticize it easily, but it's an interesting test. But John Ronson did give Al Dunlap the test. Al Dunlap is famous for enjoying firing people, being extremely glib, very superficial, having these gigantic statues in his home, all these things, and like all around just not a good person. And yet he did not come off in that test, that specific test, as a psychopath. Do you think that test is flawed because he is such an apparent psychopath? Was not one.
Well, here's part of the problem with psychopathy or sociopathy too, is that they overlap with so many other personality disorders that psychiatrists don't even include it as an official diagnosis.
Yes. Will it be included
as
in
an antisocial personality disorder, which is more the criminal part of it, which is accepted. But the broader idea of these traits of psychopathy, because there's so much overlap with narcissistic personality disorder, and in this case, Dunlop would be a sadistic personality, but psychopaths don't have to be sadistic. Okay, they can be, but it's not really a particularly core trait. And so, even though there could be despicable characters, they wouldn't come out ranked that way because the sadism part wouldn't count for psychopathy. And the narcissism part, which would be enormous for some of these guys, would only count a couple of points. So that's just the way the test is constructed, and it's on all these traits, and then you end up with some break point. It goes from 0 to 40, 40 being maximal. And somebody with a 28 or 30, anywhere there and up is categorically psychopath. But there's many ways of getting to psychopathy, and adding the traits together like a taxonomy, it falls short. It's better to look at their traits and rank them that way, and try not to categorically put them into a particular personality disorder, because some of these guys are high in sadism but not core psychopathy necessarily.
It's really interesting because we can get to ask questions. Like, I mean, it is kind of unfair, I realize this, to ask about financial people, but is there anyone that you've I'm going to do it anyway, even though it is unfair. Is there anyone in finance that you've picked up on that would have these traits? I'm interested in finance because that's my world.
Sure, yeah.
And I've met a number of people, and I could give their names, but I very much will not. Right. And I try to stay away from people who I find psychopathic, and it appears that there are quite a few people, but it's very hard for us laymen to say that. I mean, I'm not sure that the Patrick Bateman kind of psychopath is even real. It's like a subhuman. But do you have anyone that you could think of that would fit?
Well, like, I'll answer the question by not answering it. I happen to know a fair number of Wall Street CEOs, only because my brother-in-law was a full partner at Lehman Brothers and DLJ, and it was very well connected to Fortune 500 CEOs, which I've just come to meet over the years. So I know, I met them socially and for a fairly long time. Excuse me. And not one of those was ever seemed in the least bit psychopathic.
Oh, wow.
And as it fleshed out, I became very surprised at this idea, based on my common experience over 40 years of knowing these guys, and being at parties, knowing their families, and still meeting with them, just on a social basis. And there's never an indication that they have any psychopathy. So this recent thing, with the idea that there's so many leaders, financial leaders of large corporations, Wall Street, investment firms, as psychopaths, was kind of surprising to me. It's in the public discourse now, but I've known people of smaller companies that I've worked with. It wouldn't be like big pharma, maybe biotech. It wouldn't be large investment firms or Wall Street types. but rather smaller investors, right? Small investment leaders. There I have met definitely psychopaths.
Anyone you could name, or is that?
So it's not the big. So in my experience, they're there, but they're small time, and and they can navigate probably easier because they don't have a lot of visibility.
Yeah.
That doesn't mean that there aren't some real psychopaths or borderline psychopaths who are, Wall Street CEOs, but I have never met one, and I've asked around, of course, in the past 5 years of the people I know, and they're quite different than that. They're quite even-handed. One problem with real psychopaths is that they don't have the staying power over a long term to be great investors. They just don't stick with it. The life's either chaotic or they get caught at some point, but they don't stick to it because the return is often not enough over the long haul for them to stay in the biz.
Yeah, I understand. That's a very good, and that would be a horrible CEO, because if you take a guy like the head of Lehman Brothers, Dick Fuld, who I bet a lot of people would love if you would say Dick Fuld was a psychopath. I don't think he was. I think he was a reckless CEO, but he wasn't a psychopath.
Very different.
Jamie Dimon, again, he's like the hated person of the moment. There's no reason to think. He's probably a narcissist, I would think, but I'm not a psychiatrist, but I'm saying none of these people apparently have traits. But what about traders? So we have
that's different because the traders who are a little bit under the radar, and I know of a couple of traders that are real full-blown psychopaths in the United States, and for them, they get enough action. There's enough excitement on a daily basis to feed their monkey, as it were. Their hedonism and their narcissism and all the action, and they can navigate pretty well in that. But that doesn't mean that you're going to lose with them. But of course, and ultimately, you really can't trust them.
But do you think that being a psychopath is a good trait for a trader, on a purely sort of a bell curve kind of a way? Would you be closer to the I guess was the right side of the bell curve, or would you be more successful if you're a psychopath as a trader?
Yeah, well, if we just look at it in terms of a couple of key traits, certainly that fearless dominance thing, that high energy and narcissism would be very good to have. But also there was this idea, there was a paper that came out on one of the main warrior gene. It's called monoamine oxidase A, one form of that there was a report that people with that, and it's high in psychopaths too, that those people make better risk investments. They seem to do very well in gambling, much better than other people, and in their investments generally. But that has not been followed up. What has been now shown is that some of those traits, such as that expansive narcissism and confidence and brio, I guess you would call it, what would be the opposite of janteloven, okay? And
I don't know if people know this term, by the way. That's very interesting that you even know that this term exists. Janteloven is, I guess it's a Norwegian or at least Scandinavian term, which is basically success is frowned upon, I guess.
Well, it's the unique form of a Norwegian, part of the Norwegian sweet socialism, which is you're just not supposed to show that you're better than anybody. You don't point it out.
How do you know that term?
And doesn't everybody?
Oh, no. That's very...
No,
when I tell people about janteloven that you're not allowed to succeed.
To know that term, right? Maybe younger people wouldn't, because it's from the 1920s and 30s, really, from the book, that was done on that. But the only, as a side note, the only place that I know in Norwegian society where you allow public violation of janteloven is with your Nordic skiers, and because those guys can show off, they can act like drunk Americans at the, and it's okay.
That's so good. By the way, the one you're referring to now is Petter Northug. Do you think Petter Northug is a psychopath? Oh, I would love if you would say that.
He's an opportunistic parasite on the janteloven media.
You're gonna be in Norwegian media in 2 hours. What do you say? Opportunistic?
I feel a kinship with these guys because I can be a real horse's ass like that too, narcissistic, and it's more fun than anything, but it still bothers people. But anyway, if you go back to the idea of really what is correlated with the ability to invest well and to, if you look at the longest lived traders and investors on Wall Street, and Paul Zak did a study on this about a year ago, came out in a very good journal. He showed that these two key dopamine markers, one's called the dopamine 4 receptor, and the other is called COMT. And it's interesting that these two, which regulate dopamine, especially in the frontal lobe, that a nice level of that is correlated with great risk taking. And so the people who are have organized behavior, but they have a level of aggression and carefreeness that you get from this wanderlust type of gene, this D4 gene, that probably arose in human evolution, and it's what makes us climb over the mountain. It's what made one of the reasons the Vikings were so willing to take off. That takes a lot of guts, and that sort of thing pays off. And the other one is the COMT, which arose in human evolution. It also arose when we first started throwing spears, that is, drone weapons, and it changed our sense of time and space. So it probably had something to do with our sense of spirituality too, because we had to then deal with the idea of the infinite. But anyway, those two forms, those two genes, seem to be well correlated with success in investing, long-term success, and having the energy and the drive. Now, being narcissistic above that is not such a bad thing, because it provides an impetus, a real driving energy to do it every day, And, that's one good thing about leaders with a lot of narcissism is who really wants those jobs. And people, the average person, thought that every day for years and years, nonstop, had to provide this sort of, charisma and that light around them and the energy to do the job. Most people couldn't do it for a week. They think they can, but they can't. So you almost need some of these traits to create enough energy over the long haul to really make you successful. But another part of this, which may overlap with psychopathy, in fact it does, but hasn't been tested as such yet, as a parameter in a study, for example, for investment people, would be this turning off of the emotional brain, the area of the frontal lobe and the temporal lobe that regulate emotional regulation, but also are involved in caring about other people. You can imagine that in decision making, very fast, clear-minded, executive, cold cognitive decision making. You don't want all these emotions percolating up. It just slows you down, and it makes every decision, like most people, every decision for people, they do consider the ethical and moral consequences and how it affects other people. If you're not saddled with that, if you're not always thinking of that, and you're always thinking machine-like, how is this going to win? How's this going to win? Doesn't mean you're trying to hurt anybody, but you don't care. Well, that makes you one step ahead in time, and it removes a factor that doesn't make money, which is just, caring about what your decision is, how it affects other people. Because for most people, they're not trying to hurt anybody, but they just don't care if that's part of the equation. So having that sort of psychopathic trait would logically be conducive to better investing. It doesn't make you a nice person, but it's one thing that's, I think, should be tested, because it's some of these traits that probably make one a very, 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 very clever and good investor without necessarily having any evil component.
It's incredibly fascinating. You're touching on so many interesting topics here. And I do think you're right in probably that it's very hard to succeed long term in an organization as a psychopath. Would you say that's correct? Do you feel that it's hard? I mean, you're a self-proclaimed sort of borderline. Do you feel that because I presume you work in a big organization, you work in a university, right?
Right.
Do you have trouble?
In looking back, and I only started to consider this a few years ago, and then especially when I decided to write a book on it, because I really had to do some introspection and also ask people truly what they thought of me, and to get a more clearer view. And the clearer view was not at all what I had thought before. But in looking at it, from the time I was in after puberty, I've always been asked to be in leadership roles for everything, government, teams, all the way through the university years. I never had to seek these things out. People would say, "We want you to be, the head of the faculty, the head of the hospital," and I was involved in that because it's part of the ethics of our work. We're supposed to do it. I don't do it because I'm a nice guy, because it's part of the, you get into this. This is what you're supposed to do, and so I've always been asked to do that for almost my entire life without trying. And it's something to do with confidence and some level of narcissism. But I'm also I was lucky enough to be fairly smart. And growing up, I was good looking, not like now, because I know I look like a toad now, but I mean through most of my life I was good looking, an athlete in good shape, and a lot of fun, and people could always be around me and expect other people who are interesting to be there. So it's not just me, but I oftentimes have very interesting people at my house or otherwise, because we just open up, widen the gutters. We talk about everything, and people like that, and so because of that, I think people have accepted the other parts, the other nasty parts of my behavior, and when my wife was asked, the BBC came here a couple of years ago and did a thing on evil and all this, and she said, "What can I say?" I said, "Say anything." I'm out. The cat's out of the bag now. And she said that she was married to two guys, and there was this one guy who was this fun, charming, smart, happy, just wonderful to be around, great guy, great regular guy. I was a truck driver, a bartender, a laborer. I came from a pretty modest sort of background, in which I love. So I'm kind of a regular guy, and she loved that guy. And she says there's this other dark character that she doesn't like. And that's generally what people feel about me. And it started a couple of people throughout, I'd say from the time I was a young teenager. There would always be either a teacher, a professor, a priest, a doctor who would say, "There's something, I don't trust you. There's something." And they used to say that very early on. But usually people are very positive about me.
But you're describing Tony Soprano in a way.
Yeah. That's true. In fact, when I was, by the time I got to college, some of my friends who knew my wife, thank God I married my wife. We were first dates when we were 12, and then we became friends and been going steady since we were 16. And she's pretty much the opposite of me. And she's still, she's stuck with this. But she and a couple of close friends, they said, it's a good thing your mother and father and your aunts and uncles, you were treated so well early on, because otherwise you'd definitely be a mafia don or something.
Can I put up the picture of your family that you used in your book? Do I have permission?
Well, yeah, this is, my mother.
This is the family picture. I think it was in your book or it was in the article. It's coming up here.
Well, that's with my wife Diane and our two daughters, son, and of course myself, and we're swimming. We do a lot of things together. Still, we always have, and they accept my behavior, and I think because they think it's sort of entertaining in a way. But when we were young, I played with them a lot and everything, even though I didn't, as it turns out, didn't have like the connection you'd think. They're like cute little dolls or something. But as they became older, I became friends with them. Great, and that's a great relationship. But emotionally, it's probably not what you'd think a father would have for their kids, even though they're wonderful people.
So you feel like you didn't have this like deep connection as maybe you hear. I don't have kids, but as I understand that you have this like deeper connection, but you didn't have that.
Yeah, you think you do. I thought I did because I had the trappings of it. I spent time with them. But they remember me being actually more warm and fuzzy to them very early on. What they didn't realize that, a lot of the times after that, after they went to sleep, I was out working and then going to bars in Chicago and other places, dancing and whooping it up. I was really a wild man. But they never saw that, And when I do that, and I'd go out after working all night long until 6 in the morning, because bars are open all night in places like Chicago and New York, where I worked, And I'd come back and I'd tell my wife that, I worked until 1, I've been out dancing, and I'd bring home money because I was a good dancer. So I'd win a couple $100 in dance contests. So she was like, okay. I did things that would offset a really unhusbandly-like and unfatherly-like behavior. So I knew how to offset this and to make it okay for people. So I knew I had always that I had to work a little bit and use some talents to offset it with either money or something else, some other perk that I would bring home, and just to sort of, I guess, pay them off emotionally. I mean, I never said that before like this, but in a way, that's what it seems like.
That's it's such a fantastically interesting time to talk to you, and I just wanna. I know you have to go because you have a BBC interview. I just want before, so I don't forget. I just put up a picture of your book here. It's you can say the title, the full title yourself.
Well, if you just look for The Psychopath Inside,
Yeah.
it's a neuroscientist's journey into the dark side of the brain, and so it's memoir, and it's also some psychiatry and some genetics and brain connections. I try to put science in there with the personal story, and what I think it means in terms of societally and otherwise. But it's something that really changed our life. I mean, to decide to go along with this, even though it arose through serendipity and chance, it was like this story was just happening to me, but I didn't fight it. As these things came up, I didn't fight it. So it's like, maybe I wanted this to happen. I don't know. But anyway, I'm trying to turn this into some. I'm trying to make amends, I think, to my family, to find ways to change behavior. And even though they know I don't mean it, they seem to appreciate that I'm trying. You know what I mean? So it's this is a work in progress.
You're truly a remarkable person. I don't think I've ever heard anyone have this much introspective ability. I guess that's part of the job, or...
I was able to get some of it from my friends in Oslo, I can tell you that.
Wow. This is... I didn't know about the Oslo story or the connection. Well, this is just fascinating. Why do you know so much about Norway?
Well, I met some Norwegian scientists in the 90s, early 90s, and one of them, I guess, was your first astronaut. She was a neuroscientist and did some production, and she and her husband are at the University of Oslo Medical School, and her husband is Ole Petter Ottersen, who I've known since 1978, and we became friends later, but we were in the same area, and he's been the provost of UO for a number of years now, and just a tremendously intelligent and thoughtful person, and just a polymath. He's just a fantastic guy, and I know his wife, who I work more closely with, in the past 20 years. But they would come over to Irvine and do a research project in the middle of the winter. It's better to be in Southern California in January than it is in Oslo if you can't ski all the time. So they were coming over every year and became closer and closer, and I started to give some talks at Trondheim and University of Oslo, and then met many people there. And I just have a real affinity. If you have to have an affinity toward groups of people, I guess I have affinity toward East Africans and Norwegians. I don't know what it is, and in a way,
like Ivory Coast. No,
well, East Africa mostly, because I lived, Kenya and also South Africa, all along the East Coast there.
I'm so stupid,
and I just found a lot of resonance with many people there, and I found the same sort of resonance with Norwegians, and I don't know why, but there's a certain tamed wildness about Norwegians, and of course you're so intellectual. And you try officially to be such nice people. But I think the one interesting thing is the highest readership of Reason magazine, which is the main libertarian paper in the world, is Norway.
Yeah.
And being a libertarian, it fascinates me how a certain group of people with a socialist mind, or let's say it's not even socialist, because I don't The more I know about Norwegians, it's not socialism at all. It's wealthy libertarianism, because you can do really nice things. I'm a little facetious there, but I think fundamentally, Norwegians are quite fascinating people because there's a lot of contradictions.
Yeah, no, I think you're understanding these people quite well, and socialism is maybe taking it too far, but it's definitely in that direction, that's for sure.
Oh yeah, sure.
So, do you have any? I'm going to let you go before an hour has passed. Do you have any last bit of advice for people how to deal with? I know a lot of people like encounter psychopath or people with psychopathic traits at work. Do you have any or sports or whatever? Do you have any advice?
Yeah, if you're around a real psychopath, you gotta slowly walk away. This is a predatory animal, and there's no really good way of dealing with them. By staying engaged with them socially. You wanna don't make any big moves and slowly extricate yourself from their lives, because not a lot of good will come of it. Now there are people with psychopathic traits that are just so much damn fun. It's hard not to be around them. Because they just will do things and transport you to places and take risks with you that you may want. But these are people that are not full psychopaths. Full psychopaths, you gotta find out their tells. There are certain tells, and I talk about it in my book what the tells and behaviors are, because they're hard to read. That's the whole thing. But there are some tells about their behavior that you can find. And I think the good news after this, I spent most of my scientific life being a poster boy for genetics. I figured you are what your genetics were, and I just really was severely that way. And this has showed me that I've been wrong. And scientists hate to be wrong, and I don't like even admitting it. It's really not false modesty. I just hate this, but it looks like I was wrong. And the role of early environment is tremendous. Now, I think it's going to be very important for maybe 25% of the population, and in part of this is like how you treat your neighbor's kids and how you treat your own kids. It's now I can see it as being so important, and I think we got to find some way of finding those kids, of teaching parents without getting into their privacy at all, of how to spot these and then work with maybe nurse practitioners who know enough about personality disorders so that you can then take steps into looking closer at it and to seeing, is this a kid that you've really got to keep from abandonment, unless it's happened already, or bullying, etc. Because not everybody's susceptible. Well, a lot of guys just like to rumble, it's not a bad thing to them at all. But maybe a quarter of the people are, but we know what the cure is. The cure is to early on make sure there is no abuse and abandonment, and that's I think a key up note. And this is free. It's not a pill, and it's not we kind of know how to take care of the problem already, as long as we can identify it very early.
I think that's quite a positive sentiment in a way to end on, and so being nice to people creates nice worlds or something.
It's unimaginative, but it works.
It really does. So I want to thank you, James. It was incredibly interesting to listen to you and very nice to talk to you. And it's just very rare you're talking to somebody this open about their inner self. So I want to thank you a lot, and I hope you have a great weekend and you sell a lot of books.
And I'm going to try to get over to Constitution Day again. I hate to miss that.
Wow.
I usually get there and maybe at the Oslo Freedom Forum and my favorite, the Norsk Derby. If I don't get there, I'm very depressed all year.
Well, you have to reach out. Now you have my emails. I would love to sit down and have a coffee with you. Okay, thanks so much, James. And I want to thank everyone for following our stream. We've been recording all day. We're going to chop this interview up and put it up on YouTube. And I'm sure it's going to be viewed quite a few times because people are very fascinated by psychopaths and psychopathic traits. So thanks you, James, and have a nice weekend.
Have me on again sometime.
For sure.
Be happy to.
For sure.
If there's interest.
I'm going to take you up on that. Bye. Bye.